All right, welcome everyone. Let me know if the mic is good, the sound is good, the audio quality, the video quality. Let me know everything's working. Welcome. Glitch and Giggles saying gold. Yep, it's probably gonna be gold. Look at this trade that we had yesterday. Isn't this just absolutely beautiful? Absolutely beautiful. I closed the trade yesterday on the 0.618 because, you know, because I could and I did. That's what I did. Hamid says US 30 and gold. Why use 30? Like why? I ask you, yeah, you know, I ask you that every time, and you probably I answer that every time as well, but I do forget. But I'm still sick. It's absolutely insane. I thought like this weekend I started feeling better, and then I woke up yesterday with just aching in my whole body, like having a headache, like crazy headache. I don't know what's going on, man. It feels like I've been, you know, I broke my foot, and then after breaking my foot, it's just been a downtrend, basically, creating lower lows. Maybe I should say lower highs. Definitely lower highs. Can't create any new lows. Okay. Hamid says no commissions. All right. So okay, no commissions. That makes sense. Did you like? By the way, did you like the trading quiz we did yesterday? Might be doing another one of those. Might be doing another one of those today as well. Look at that trade, man. That was a nice trade. That was a really nice trade. Now, of course, I closed this, I believe, here for like 2.5 or 2 hours, something like that. And I did actually add into it. So you guys know that I've been trading my 5K high stakes account. Yeah, tea kind of helps. Definitely. Tea with like honey in it is very nice. But today we're drinking coffee. I got one of these, you know, one of these where you kind of press it down. I love that. Ooh, I love my coffee. You create a coffee channel. Oh wow, that's way too hot. Damn it. Okay, so trading my 5K high stakes account, right? And I was how close was I to missing out on stopping out on that one? I believe I was $30 from stopping out. My balance is now 4,663, which means I am about 1,060 away. So what I'm gonna do is I'm gonna take it, I'm gonna compound that risk. I'm gonna do exactly the thing that I should not be doing, the exact thing that Alex has recommended me to do, and the exact same thing that Mike has recommended me not to do. I do like both of them, but I do kind of like Alex's idea more, because it's more fun, you know. It's just go all in, just risk it all. Obviously I'm not going to risk it all in one trade, but definitely I will increase trade. Risk, I mean, not trade. Man, I have not been sleeping well tonight. I am quite tired. It's going to be interesting to see. Let's make a poll. Let's see what pair we're going to be trading today. So I'm going to make a poll in the comment section. Let's go to the comment section. Where do we have that one? Going to create a poll. What pair are we going to be trading today? Probably gold as always, but let's see. What pair? Make a question. Then a bit later in the live stream, we got Pedro coming on as well. Yes, Heidi, you're absolutely right. Please click that like button. Get the likes up. Get more people in here. Let's teach them how to trade gold. Okay, so you can select between gold and EURUSD. You got 2 minutes. 2 minutes from now. Also, make sure that you go into the sign up for the. Oh, we got Dirk here. How's it going, Dirk? Got Dirk in the background. What a pleasant surprise. How's it going?
Hey, just saw you alone today, so I thought I'd jump in and join you for a little while.
Well,
So
nice.
don't feel
Thanks.
so lonely. How's everybody doing?
I think. Well, I'm not. I'm not very lonely. Well, I am. I am. I am. Yeah, I am.
Especially in these types of markets, you shouldn't be by yourself.
Yeah. No. This look. Gold is. Wow.
I burned my fingers already because I tried to trade against the markets this morning.
wow.
Did a little short, but I saw my mistake very quickly and was stopped out. And yeah, so I'm actually now looking for a little bit of a pullback because I actually would like to go long, but not at these levels. I mean, that's what I've been saying since we were at 2,910, not at these levels.
Yeah.
But we keep on bouncing off the 21 EMA there. Pretty far away from the 200 EMA, so I'm going to wait until things settle down. I kind of have a feeling also with, I think tonight Trump is going to address the US Congress, that the markets are going to be a little bit on the edge after what happened yesterday, where we saw the market crashing during the press conference.
Yeah, because he started talking. Like.
Yeah. As soon as he opens the mouth, the troubles begin. Yeah.
Yep. Like he, I think the main reason that look at my S&P long, it looks so good, and now we're just all the way down. I mean,
I thought of you yesterday, but it shows, it's like really this type of market environment where the sentiment completely depends on one person opening their mouth or getting out their mobile phone to send out tweets. It's crazy. It's really crazy. And I like for my own trading in cryptos, especially where the volatility is even higher, I just trade so low position sizes with the same outcome. I'm like at 1/5 of a position size I usually trade, but the up and downs are still the same because the volatility is so crazy. Gold it is. Again, gold.
Yep. As always,
everyday gold
trading. Let's take a look at gold here. Okay, so so what I'm thinking right now, we have, what's up, Henry? How's it going? Welcome. Evening. Henry is from Australia, which means it's on the all day. Do you have summer in Australia now? Like, I find that weird that it's summer over there when it's winter here, and it's the other way around. I find that hard to believe.
Yeah, kind of.
I need to go there. I need proof.
I cannot go to Australia. I'm going to get bitten by something. I'm super afraid of spiders, so this is absolutely a no-go zone for me.
Yeah, my fiance is also very afraid of spiders, but my son loves spiders. So there's like when there's a sometimes we have quite big spiders hit. Like I'm not Australia big spiders.
The super fast black ones, or.
Yeah.
We have those too. They always like to hide in the basement, like in corners, and then
exactly.
They jump out on you, like probably because they know I'm like super scared of them.
Yeah, so she's seeing a spider and she starts screaming, and my son walks over and like starts playing with it and like crawling all over his body. I'm like, that's so weird. Like
Nice.
Yeah. What I don't like is snakes. I really do not like snakes.
I don't mind snakes at all. Like for me, it's really spiders, and like my personal nightmare are those big centipedes. You find somewhere in the tropes. The ones like are thick and long with a lot of legs. But don't let me get started. Let's talk about gold instead.
Yeah. Okay. Well. So what we have right now is we have gold coming up into a resistance level, and I do feel like the move that we're getting to the upside here on gold, and we're also get the move on S&P 500. It feels like it's time to start thinking in terms of mean reversion. Okay, so what I want to do here is I actually have an indicator that I've created to try to. I'm back testing a few ideas for an algorithm that I'm working on, and I got an indicator I created here for that testing. For testing purposes, just looking at the ATR, so you can remove the ATR, the ATR too. So this is, I believe, this is the daily ATR for for gold, and you can see I've added lines like red arrows whenever it hits the upper ATR and green whenever it hits the lowest ATR. And the idea would be to look at basically having a rejection at the upper ATR. That's a bit high though. I don't really, but maybe because you had a big move here, maybe the ATR is actually stretching quite a lot here.
Where is that currently, the upper level? 33, or what does it say there?
Well, I gotta add the ATR. Do we have ATR here? Let's see. Let's add I also have created another indicator called ATR in pips. So basically what this does is it shows the pips here in ATR instead of the dollar value. And right now it's at 4,054, which means around 400 for gold. So the ATR is 400. And if that's then the open, you can add 4,000, which means, yeah, that's correct. Actually, the ATR is up here on the daily. So the daily ATR is up here. Go in, we can. By the way, I'm gonna. You know I'm Swedish. Like you know I'm Swedish. You couldn't like just guess that. Definitely not. You're probably like he knows. He knows. Yeah. Okay. How do we like? I wanna show you guys something. Templates. Templates is super important. So what I'm gonna do here is I'm gonna go into text. I'm going to type in ATR, and we can type in daily ATR, and then I want that as green, not the text. I want the line as green, and that looks good. And then what we do is we save as daily ATR, and then whenever you have a level like this, I can switch to AP, or I can switch to having that level as my stop loss, or daily ATR. So using the templates in TradingView is a very good thing to do. Then of course you can have the indicator showing you lines like this as well. But if you go into the 4 hour, we know that on the 4 hour, gold is very overextended based on the ATR. And you do see that when the ATR is hit, you do see a reaction. Like you don't have a good reaction here, but you have a good wick on this candle, which means that price hit the 4 hour ATR and then had a big wick to the upside. So you had a rejection, a big bounce. Same thing here, bounce on the ATR, and you have a wick on that one. And you don't have a wick on that candle, but the next 4 hour, you see you had a reaction. This time it's way overextended, and we have the daily ATR all the way up here. Am I still short USD CHF? No, I've exited that one. I believe I've exited that one, and I'll post all the updates for that one after my session here in the live stream. You know what? Let's run the intro because you're here, Dirk, and I'm going to run the intro to my segment. So we're going to start that one just a little bit earlier for everyone who's here. All right, there we go. The technical mastery show. That's what we do here. We do technical analysis and try to teach you all I know about technical analysis and the way I'm using different indicators and different tools to find an edge in the market. Right now we're looking at the ATR, and we know that the 4 hour ATR is way overextended. Let's take a look at the weekly ATR. Where do we have the weekly ATR? Weekly ATR is all the way up here. But you see when gold hits the weekly ATR, got some nice reactions here. Got some really, really nice reactions. I mean, you can look at this one right here, hit the ATR, and then obviously looking at the next candle, you had quite a big move to the downside. So using ATR in your trading, I know Victor likes it. Victor talks quite a lot about it, but it is quite powerful because after, when I began with trading, or I began trading, I began looking at technical analysis. I always have had this idea that the best way to trade is following the trend, and the only way to find the trend is to look for swing points like highs and lows. But then I realized that, especially in the Forex market, the market is trending in many different ways. You can have an uptrend and a downtrend, and I've actually started viewing ranges in more of a trending, from a more of a trending viewpoint, and understanding that it's not the trend that is the key point in making money in technical analysis. It's the mean reversal moves in the trend that makes you money. So it's the retracements in a uptrend and a pullback in a downtrend. That's where you get the most money. And if you put an EMA on whatever trend, you will see that most of those retracements and pullbacks are getting closer to the moving average. And what does that mean? Well, it means that it's getting drawn closer to the average price of that trend. And this can be played in ranges and trends or whatever. And the beautiful thing about this is you don't even need to have a trend. Okay, you can have completely random price action. Now, let's assume that you put up a trading script or a trading program, or use the computer program, and tells it that create a candlestick chart, and every new price will be completely random and completely independent of the previous price. Okay, let's just create a price chart that is completely random, put it on the graph, and you will see that one price is going to be the highest price. One price is going to be the lowest price. And there's going to be an average price, even in the random price chart. So you know that statistically, if that random price chart reaches the high once again, looking at the law of big numbers, you can assume that eventually price will start moving back towards the mean. So you don't even need to have a trending market to understand the mean reversion idea in trading. And that knowledge is something that is very misunderstood, and very few people, I believe, understand that. It's a very, very important aspect of trading, I believe. Dirk, I gotta add your social media channels in the description as well, to make sure that people can tune in and follow you and your channels as well.
Yeah, thanks. And so what was that? The daily ATR you had at 33, right?
Yeah, around
and
33.
And the weekly one?
Weekly is at 43.
43. We have the previous month high also up there at 56. I mean, we still could overextend a little bit.
Yeah.
What we're seeing here in trend is really quite significant. Let me quickly share my screen here. Now I have to find the right one with a million open ones. Oh, come on, where are you? I think this one should be the correct one. Yeah, so it's really quite strong what we are seeing here. Still like deflecting of a 21 EMA here, the yellow line. I almost said I'm a bit chicken feet. Here we go again.
Chicken feet. There we go.
I'm a bit scared, honestly, speaking to enter. Now there's not so much space until the first real obstacle that Jonatan just mentioned at 33, the daily ETR. So the downside risk all the way down to possibly 2,900 again, where the 200 EMA is at the moment, is a bit higher. I don't think that's a very good risk-reward ratio to take there. Ignore here the sell and top signals. As I said yesterday, also I want to trade here a bit with a trend. Also ignore what you see down here. It's something I'm trying at the moment. It's called Ehlers loops, like a concept of reading if the market is within normal cycles, but I have to look more into that. I don't quite understand it for now. It's going to be like a bit my project for this week. And so my ideal plan really would be today, for the moment at least, either not to trade at all because of Donald Trump talking tonight again. I think the closer we get to this, the narrower our trading bands will become. or if we really see, hopefully here, pullback somewhere into the area where the 200 EMA at the moment is. Of course, as we continue, this is going to climb higher. So maybe later at 2908, 2910, something around this area. That would be ideal for me to look for a long entry. As I said, the later the day gets, the less likely I am to enter the markets, just because we have the speech coming up tonight, and I really don't want to be caught up on the wrong side of the market. I was so happy yesterday that I was done already for the day when he started talking, giving his press conference, and because that is, it's like one of the examples where you can use all the technical analysis you want, but in a situation like this, it's not going to help you, obviously. You need to wait then, of course you can look like for ATR levels and so on and so forth then, but from my experience, it's always the best to kind of wait at the sidelines in a situation like this. The same goes probably, excuse me, for the NFP we have been coming up. I think tomorrow we have the interest rate decision in the EU also, if I'm not mistaken.
Yeah, that's right.
Yeah. So I don't know about you. It's like, do you feel like this is like a trade jumping into your face right now?
I feel like.
Oh, really? Yeah.
Yeah, let me bring up the screen here. I'm looking at, so what I've added here, I know it's quite messy, but what I've added here is the 2 times ATR. So on the daily, obviously the one time ATR is the green line, and then the 2 times ATR is the blue line. You can obviously see that gold doesn't very often hit the 2 times ATR on the daily, but it really likes the 1 time, the 1x ATR, which is up here. But on the 4 hour, we switch to the 4 hour, we see that the reactions when it hits the 4 hour 2 times ATR is definitely interesting. And that's the level that we're hitting right now. So, and we have also, it's in the midpoint of the reload zone. So what I'm going to do here is, I'm actually going to look at a short trade on gold based on a move back down to what I believe is like the perfect support. We also had the 4 hour candle closing in 2 minutes, and it's reacting to that level. It might close below. We're gonna go into the lower time frames and see if we can find a confirmation here. So what I want to do is, I want this to be my TP. Now I want to front run that level a little bit and probably put TP maybe here if I can. Yeah, that's going to be my TP. Now, the best thing to do is obviously to have the stop loss above the daily ATR, but I think that might be, I'm looking for a quick trade here. So I want to have a tight stop loss, and what I'm going to do is, I'm looking for a high risk to reward trade. I'm looking for a tight stop loss. I'm looking to get out of the trade quickly if it runs against me. So basically, I'm looking for a move to kind of fill this gap below, and we have, a really good possible top formation happening right here. So a break below this level, stops above here, and I have a 3 something, or it says 3.4, but I'm gonna say 3 because it might be spreads, commission, slippage, all of that, and the way where I enter based on the market order that I'm gonna use. So this will be my trade. I'm currently up on the account 1,600 from stop loss. I'm going to take, because this is a strong move on gold to the upside, I don't want to be risking too much. So I'll be risking $50, which is 1% of the original size. So 1% on this trade, I'll be taking. What do you guys think in the comments about, what do you guys think about a trade like this? Let me know how you would have traded this. Do you want to wait for higher prices? Do you want to long gold? Do you want to short it? How are you looking to trade this?
I think from a risk reward perspective, that's a very good trade, actually, I must say. It's not the one that came to my mind today. I still would prefer a long entry, not at these levels, but I can see why you want to trade this, actually. Yeah.
I think I would prefer a long entry as well. And if I get a good long entry, then yeah, I will definitely go long. This Christian goal always with me, always with the, I really like this person, all those with the trades I'm taking. I go short, she goes short. It's we're in good sync here.
In sync.
Okay, how did you analyze that? Okay, let's
wait a while, but please don't do that. I will put all my money on sale.
Yeah, okay, I take that back. I take that back. I don't like you if you're gonna be taking all your money on a sell. I take that back. What really gets me interested is good risk management. If you can tell me like I'm risking 0.25% on this, or look, we're actually breaking down. Okay, so we got the 1 minute close right here. So I'm gonna enter. Yeah, I'm gonna take this trade. Okay, let's go short. Boom.
Good one, maybe. Yeah, good.
Am I short? Yeah. Okay, so I'm short here. Let's just open up my MetaTrader to make sure that you're actually seeing, full transparency, seeing what I'm doing here. This is the trade that I have. You can see the previous trade I took. I entered long, and started selling here. Now this is the next trade that we're looking at. So I'd rather do the analysis.
I'm going to join
I'd rather do the analysis on. Sorry, Dirk.
No, sorry, I just said I'm going to join you on this trade now. You've convinced me. You sold it to me. I put all my money in that trade now. No, just looking nice, please.
Let me look at what. Let me see. Okay, let me see here. So the way I analyzed this trade was I first looked at the Modest Mike. Oh, Modest Mike also has a Twitter profile. Well, go to Twitter, search for Modest Mike, and give him a follow. Hopefully that's the right person. Okay, so we're gonna add the ATR here, and the way we started doing the analysis was looking at the ATR. So first looked at the ATR, didn't really like what I was seeing on the daily. We could easily see a move up towards the daily ATR, which means that this will be a quick loss and I'm out of the trade, and we will perhaps start looking for shorts. However, the 4-hour ATR hits the 4-hour hit the 2 times ATR perfectly, and whenever that happens, you will usually see a good reaction from gold. But really, that's just adding to the analysis that I do with price action, because you gotta understand price action is everything. Okay, maybe not everything. I do really like ATR. It's important as well, but price action is very important, and the fib levels for me is very important. So what I did was I put the fib tool, selected the fib tool, and I'm going to show you the settings that I have here. In the settings of the fib tool, I have the 0.618, the 0.786, the 0.702, and that's the only ones I have, because that's the reload zone, or whatever you want to call it. So from the high to the low, we're extending that to the right, and we see that price hit the midpoint of the reload zone, which is the 0.702. This is usually where you have a if this aligns with a horizontal level, then that's usually a good horizontal resistance. And what we see here is price pulling back. Now there is this thing where price can kind of like play around with the reload zone levels within here. So you see that you have the 0.618 right here. Now this could be a support as well. You go down to the 1 minute, you see that there is on Oanda, it's actually untested. So it's, well, no, that's tested. I would argue that that's actually a tested level. But what prompted me to enter this was, here you have a range, and if price breaks the range lows, you can expect price to move a little bit lower. Here you have a potential range, and if price were to break this low, you could have seen a move lower maybe here, and then you have another range up here, and price broke it to the downside, started moving downwards, and we could expect price to start moving lower. So where do we want to see a take profit on this one? What we do is we go to the 4-hour. Where is the breakout area on the 4-hour? Could it be this level? Does that align with the 4-hour? We go to the 4-hour, and what we see down here is a very perfect, I would say, breakout level on the 4-hour. So this will be my general area for target. That's an untested level. We can go into the 1 minute, and we can look at that, and that is actually untested on the 1 minute. You have a strong 1 minute candle opening below the level, closing well above the level. This is a very good breakout, confirmed breakout, an untested level on the 4 hour. The reason why I want to take profit here is because we obviously have a strong range right above that level. And I want to make sure that I front run the most obvious level, because everyone's going to be looking at 2,895, which is this level here. And I want to exit the trade before that level hits, because I believe this is where all the liquidity is based on this type of price action. Yeah, that's the trade. Wish I bought more.
I was just thinking exactly the same. I did like 0.05 lots now. Normally I trade 0.10, but I don't trust you that much yet. And no, just kidding, of course. And yeah, looking good. We need to fall now. Actually, when I look here at my chart, below the red line, which is the 50 EMA. And if that happens, for me, that would be the confirmation or a strong indication that we are sooner or later going to test this area here around the 200 EMA. So right now I have my take profit at 2,900.5. Where did you put yours?
I'm actually entering a new position here.
You're adding to the position?
Yeah, I'm adding to the position. Where I entered?
No, where you have your take profit. I didn't hear that.
Right above 2,900.
Yeah. Okay. So we are on the same level there. I
mean,
mean,
I'm gonna put it at 2,902.
God damn.
I need to like above that level. Because I wanted to have it above that wick, and now I added to the position. It's a 3R trade. It's a
good trade. Really, it's a really good trade. I wouldn't have seen that one if I wouldn't have joined here.
Well,
so I owe you a coffee if that one goes into the right direction.
Yeah, it's a good trade if it's a winner. I mean, if it just takes out the stop loss, then it is what it is.
It's still a good trade. It's still a good trade because the R is very good on that trade. Just makes a lot of sense.
It makes a lot of sense.
There's here a good area for him. Yeah, I tend to agree. I think I might be a little bit low with my take profit on 2,900.5. But let's see. We need to reach that first. Could as well be that that we bounce off there.
You know what, Hamid? I'm gonna follow you. I'm gonna put my TP at 2904 because 2904 is actually that's actually a good level. Okay, 28.
I'm going to follow you guys now as well.
2894 is actually a good level. I'm gonna use that, and I'm probably gonna take partial profits on this one because I'm actually I'm adding to a trade that's counter trend. So and that is never a good idea. So what I have to do is, what I'm gonna do is on the first position I will exit here, and then the rest of the position will be a free trade.
Yeah, you can do that. Yeah, good comment here from Big D. It's always a good trade if the analysis is correct. Doesn't mean it will be profitable, but still it's good. I couldn't have put it in better words, really. Just because a trade ends up as a loss, doesn't mean the analysis was wrong there. It's just part of the game then, but something with a decent setup where we can have a 2.5 or 3R on lower time frames. I mean, that's pretty rare enough in itself already. This is a trade I would take any day.
Do you think people are actually following our trades here?
I think so.
Okay, that's group trading is not allowed at the 5ers, so hopefully we don't have hundreds of people taking the same trades here. That's not what we want to be doing here. We want to do more of an educational thing here where we show you, it doesn't matter. I'll tell Saul, that's my gang. That's the trading room group.
I mean, we are doing live trading, so it's kind of to be expected, of course.
Of course. Okay, so the first TP on the first position, I'm going to take that. I'm going to exit that one at that level. Because I feel like I really need to get better at averaging. I need to get better at taking profits. That's I'm good at taking losses.
Not you need to get better. I say in general. That's it's always the hard part of things, taking the profits. And I don't know how many countless times, I by the end of the day I look at the charts, then again, kind of when I write my trading diary and tell myself, well, you just should have been a little bit more patient. You were too early in taking your losses, your profits, or too late in taking your losses. It's part of the ongoing development as a trader. Even after all these years, there's always something to learn, and it looks like we see continuation pattern now, no? Like this microstructure, lower highs, lower lows, looks pretty nice. I think your take profit is going to get hit now, and then you are in for a free trade. Nice.
Yeah, and then I'll just move my stops down.
You have revived your account then also.
Don't miss out on this chance to really level up your trading game. Risk management is the arguably the most important part of trading, and we're gonna have a really cool risk management marathon, whatever that's called. A risk management event coming up on the 11th of March. So make sure that you go into the link in the comment section, sign up, and the first 5,000 that signs up will be able to enter a competition where we have some really cool prizes for you guys. And we're also, I believe that we're launching a new evaluation account only for this event. So make sure that you are subscribed to get all the information on that. So what I'm doing here is obviously okay, so what's the profit on that one? Let's see. Okay, the profit on that one will pay for the whole loss of the previous one. So hopefully that one gets hit. I have to take into account the spread. I'm gonna have to move that up a little bit to make sure that if it hits that low, I get filled.
Now it's waiting time. Everybody is staring anxiously at the gold chart now, probably at home as well.
Yeah, Vinicius, I like the hyper growth program as well. It's really cool to be able to double your account every 10%. However, as a swing trader, it definitely creates some issues with the daily pause, because it's based on equity, and as a swing trader, you can be up quite a lot in equity. It can fluctuate quite a lot, so you got to be careful with that. And last week I was up quite a lot, and then Trump happened, and I went back to break even, and it's like, I might. The problem is, if I took profit and the trades went to my TP, it would have been such small winners, and that's the issue that I'm having with taking profits too early. Like, if you take profits too early, then you're not going to have the big winners. And sometimes you need those big winners to push that equity curve higher.
Yeah, I mean, I can always kind of understand, the notion of taking profits early. Let's say when you start a new evaluation account, like the one I just started for golds. For gold, it's always nice, when you're up like $500, $600, $800, or $1,000 already, because on a psychological level, you can tell yourself, even if I have now a series of losses, it's going to take a while until it eats up my profits again. So I can kind of understand the notion when people want to do like this. It's always easier when you think, well, if I'm losing this trade, I'm not back at square zero or in negative numbers completely. I'm just going to let go of some of my profits, just of course in brackets. But I get the notion there, and I have a tendency of doing the same, by the way, when I start new accounts, because it just feels better. It makes you more confident, in my opinion. I've been meaning to ask you something, by the way, Jonatan. Like when you are in a trade, I think you're muted right now.
Yeah. Sorry, just want to take the spreads on the spread on gold is quite good. I can't really complain much on the spread on gold. I mean, if you put a MetaTrader and you look at the live spread on the 1 minute, that's quite normal and quite good. So I don't think. Not sure we can lower the spreads more than we already have.
I think we had this discussion like 2 weeks ago with Mr. X already, if I'm not mistaken. I think you're like trading like super low time frame, high frequency scalping things. Of course, you I can understand you need like even lower spreads, but let me guarantee you, as somebody who has traded probably with every bank there is in this universe, the spreads are extremely low at the 5ers. And we saw that yesterday, especially also during the Trump speech, the spreads didn't widen very much there. They were widening, of course, a little bit because the liquidity is not the same during an event like this, but they are much, for me, honestly speaking, in the top 5 when it comes to execution of trade spreads plus trade execution. Just spreads doesn't necessarily also say is the broker good or not. It's about trading execution. Do you get what you see price-wise? I've been meaning to ask you, Jonatan, when you are in a trade, for example, this one now, and you are not live streaming, and this is a question I was asked by a member of my community the other week. Do you pay attention to the chart the whole time, or do you focus on something else to not look at the chart for the whole time? Do you get what I mean?
Yeah. No, I can't let go of the chart when I'm trading like this. I have 3 screens. Actually, I have 4. Well, actually, I have 5, but 3 that I'm using mostly here. So I got to the left of me is the stream with all the controls, managing the stream, and then in the middle I got trading view, and then the right screen is MetaTrader, and that's the one you're seeing. But I'm of course doing these live streams many hours every day, and I'm doing lots of things in the background that people don't see on the live stream, so I can't be laser focused all the time. But what I see is when I'm in a trade, when I'm scalping, I'm very very inefficient with other things, like managing the comments and taking care of that and writing comments and things like that, because I need to be very focused on the trade. Because I'm on the 1 minute here, if we look at MetaTrader, and every candle matters in this trade. So I need to be mindful of this, because right now the trade that we entered is no longer the trade that we're seeing on the chart. Right now, what happened is we had a range up here, broke down, retested range lows, and then moving lower. But what we're actually creating now is a higher low right here, a lower high here. We're actually right now creating a symmetrical triangle, and that creates sort of a different market structure than what I envisioned the trade, the trade to do when I entered. And if we break above this level, I might as well just exit the trade, because now we're in a completely different market structure. And if we zoom out to like the 5 minute, now this is a good break and retest. We can add the fib right here, and we have a bounce inside the reload zone. This is a good long. This is a very good long opportunity on the 5 minute. So if this 1 minute setup is invalidated and a breakout, I have to exit this trade. And that's what I talked about earlier. Like, if you're trading against the trend, you better be ready to make very quick decisions and take losses. And obviously, taking those quick decisions based on like a 1 minute symmetrical triangle, you got to be quick. You got to be very, very quick, right? So I have to focus on the chart. If I'm not focusing on the chart and I'm using that set and forget approach instead, it's like swing trading, but you're speeding up time so that every hour is 1 day. And if you just forget about the charts and the trade just moves without you, you'll have completely different structure than what you saw when you entered the trade. Because the market is, it's telling us a story, and it's telling us a story of the fight between buyers and sellers, and the quest to find equilibrium in price. We have the forces of supply and demand trying to find equilibrium here, and that we have to listen to that. So this 1 minute trade is based on sellers overpowering buyers because gold is extended. If this triangle breaks to the upside, then it's a clear sign that buyers are now stepping in and taking control and perhaps moving price higher in the current trend up to perhaps a daily ATR. It's going to reverse at some point. We don't know when or why or when, why, or where, but it's going to happen at some point, and we have to be there, listen to whatever the market is doing and following that. So for me, trading this way is not about having a very strict trading plan, like a systematic trading plan. It's more about looking at what the market is doing and then following the flow of the market. And the best way for me to explain that is in the context of trends. So what you have here is an uptrend, and this has been an uptrend until here. This is no longer an uptrend on the 1 minute, but it is still an uptrend on the 5 minute. And on the 4 minute, the 4 hour, it's just a move. It's just one candle. It's just one move straight up. So there's really the only time frame that is telling me that this is potentially a break of structure is on the 1 minute, which is very weak, a very weak argument for a trade. So I got to get out of this one as quickly as possible. And what I mean by that is, as soon as I see signs of this not working out, I got to get out of the trade. So what I'm going to do right now is going to close one of the positions right here. So I'm taking a $6 profit on the first position. If we break out, it's going to be a much smaller loss than this one. And as soon as we break above this level, I need to get out of the trade, because this is no longer my trade. I didn't enter based on this triangle. I entered based on the break and retest of the range lows, or the break of the range lows. If the range lows gets reclaimed, then I'm not in the same trade. I'm trying to put, I'm trying to take my bias and apply it to the charts. Hopefully that makes sense.
Interesting. I think don't necessarily agree with you on this one, because what I'm seeing here, it's basically, honestly speaking, probably very much what you just described as well. For me, I'm not looking so much at triangles and flags and so on and so forth. But what we see here is what I always call a compression. So in trends, you will eventually see always the price going back to moving averages. In my case here, the 21 EMA, here touched again the 21 EMA, here again. But you can see that the dynamic of the move gets slower and slower. And usually you will then see either price going immediately back to the 200 EMA or forming this type of compression zone. Now, this can, again, like Jonatan just said, go in two ways. So you can look at this like you just did with a triangle, for example, or bull or bear flag, or whatever you want to name it, and which can, of course, resolve itself to the upside. And then I very much agree with you. This would be a sign that I need to get out of a trade. However, for me, that sign would only be there if we break above 20 then. But it can also resolve, and this is what we, honestly speaking, usually see to the downside with a return to the 200 EMA. Usually, again, yeah, we are on the lower time frame. Doesn't mean this is always 100% going to happen. Usually, it's like the chance is above 50%. It's better than coin flip. So it can be at 52, 55, 60%. Something like this still doesn't guarantee you. What is important here, and I very much agree with you there, Jonatan, is that you kind of need to have your exit plan. When is what I was analyzing just now, my reason to enter the trade, when is that becoming obsolete? For me, it would become obsolete when we go above 2920, because then in this structure, in this whole structure, I'm looking here. So in this whole structure here, we would see a new higher high, which means I'm trading completely against the trend then again. So I might have to accept then that I get out at the new higher high. But for me, this would be the exit level for that trade where my initial analysis gets invalidated. For now, I'm still seeing more potential to the downside because of that compression zone, which in above 50% of the time usually likes to resolve itself to the downside. But we'll see.
Yeah, I'm starting planning
I smeared on this chart, my God.
I'm planning a second position here, so you can see that I moved my stop loss down here, because again, the reasoning that I just explained, that if we break above this level, I don't want to be in the trade, so I'm putting the stop loss at the last high pre-break. And if we get a break below this trend line, I'm going to view this as sort of a fake out. If we break below the trend line, sort of below that level, then I will be looking at entering a new trade. It's got to find a TP level for this trade. I want a tighter TP for this one, probably at that very low. That would be 1-to-1 risk to reward for that particular trade. But then if we actually do break down, then I can have my stop loss here. So that creates a what would that be, 1.3? Yeah, so I think that would be the trade if we break down with that stop loss.
I have to make a move actually. Now I just
saw
it's almost 11:30 already here. Yeah, let's see how the trade continues. If I have some time, I'll jump in later again and look for more trades.
Yeah.
Until then, everybody,
well, thanks.
Have a good one. Take care.
Thanks
Bye-bye.
for joining, man. Take care. Right, so it looks like we're potentially breaking down here. I'm going to move over MetaTrader to my main screen here because I'm not using TradingView here. Okay, so I'm going to enter this trade right here. I'm going to go short on that one. Okay, so got the TP up here, stop loss for that one up here. So got 2 positions, 2 stop loss, one TP on that one below. So basically looking for a break to the very lows here. When we break down, I will adjust the first stop loss to that level as well, and potentially also take profit on that second position based on what the 1 minute is doing. We want to take a look at the 5 minute, right? Because I said that, you know, the 5 minutes looks like a good long opportunity. That I believe might be gone. We're definitely seeing some strength, some weakness coming into gold right here. We're retracing that first bullish move on the 5 minute, and that 5 minute bullish candle happened on that reload zone and on a good support level. We can adjust that horizontal line right there. Now there's so many lines here. Remove some stuff here. That one we're going to keep, the rest we'll get rid of. Now we will add a level based on a 5 minute, because if we're breaking below that level on a 5 minute closing basis, then I believe we have a solid breakdown, and I'll be moving my stops. No, actually I think, yeah, break below that level. That's 5 minute level. That's 5 minute support level. If we break below that level, then I will be moving the stops on the first position to the stop of the second position, and get ready to take profit on, you know what? Probably take profit on both positions, because I've just explained how I need to get better at taking profits, and I'm trading against the trend. If you're trading against the trend, you should be taking more profits earlier. You should be aggressive you should be way more aggressive if you're trading against the trend. But then again, you got to think about what is a trend. Can you also view a trend as a behavior where the market is moving from one extreme to the other? And I would argue that yes, you could also view that as sort of a trend. And then this becomes a viable strategy . I think I feel calm today because I had a good day yesterday, and I had a very good trade on gold yesterday, and I feel like that positivity is affecting me in a good way, where I become confident. And I'm always in the process of thinking about what I'm thinking about, and thinking about my emotions that might affect me in trading. That's, I believe, the confidence from yesterday spills over into today, and I believe that might have been the thing that made me add to a position like this one as a counter trend trade. The reason why I'm saying this is because it's not affecting me a lot. Okay, it's not like it's affecting me a lot, but it is there, and we have to be wary of that. We have to understand that even the slightest like the even the positive emotions, like being confident from a trade yesterday, will affect us going into today. Most of you, if you're new in trading, you're not going to be able to realize that until unless you've done the work. You need to do quite a lot of work, you know, thinking about the way you're thinking, to be able to realize that, okay, I'm feeling good, I'm feeling great. How's that going to affect my trading? Well, it will affect my trading in a good way because of the confidence in my technical analysis, but it might be affecting me in a bad way, where I'll add slightly more risk than I'm supposed to be doing. And you saw a good example of that today. Now, luckily, I exited that position, right? I went out of that position. We got a breakdown, get moving stops down. Will I be taking early profits on this one? I don't know, because now we have a head and shoulders, right? Isn't this a head and shoulders with the left shoulder, the head, and the right shoulder and the neckline right here? So if my TP gets hit on the first position and we break down, that's a confirmed head and shoulders. And yeah, I feel great when I win. Yeah, I also feel great when I win. Like we all feel good when we make money, you know? We all feel good when we make money, but like for me, it's not about making money. Okay, who am I kidding? Of course it's about making money. That's why I'm here. That's why we're doing this. It's all about making money, but it's about, for me, it's so much about the feeling when your idea turns out to be perfect, like to work out. If you have a technical idea and you enter that trade, you set that stop loss, you set TP, and you watch price action just move perfectly, exactly as you've predicted, that feeling is so much better than making it, like getting a withdrawal or getting a payout. Like the feeling when you've spent years studying technical analysis and you put that knowledge to the test in the live markets, trading against, you know, all of these algorithms and all of these hedge funds. Like your trade, like the competition in the gold market today is insane. If you're able to pull money out of the market, you're in the top 1%. Okay, if you're able to do that, you know, profitably, long term, consistently, you're in the top 1%. And the feeling that you're able to compete with the best of the best is what makes those payouts and the withdrawals feel so good. This price action right here looks very nice. I like that we have a breakdown, took out that low. Okay, we took out that low right there. We're now retesting this level right here. Can we get a rejection? If we get a rejection, I'm confident that my EP will be hit on the first position. That's a $60 profit on that one. It's a $77 profit on the one below. That means 1.5% up on the account. As a trader, it's also very important that we are able to adapt. I'm gonna send the link to the live stream for Pedro. Also gonna adjust the description of the live stream. Make sure that we got Dirk's socials in there. We got Pedro, which is the community manager of the Portuguese-speaking community here. So we're gonna be adding that, and also Pedro has his own YouTube channel as well, and we're going to be adding that to the description as well. All right, so we're now seeing a rejection from price here. I like what I'm seeing. I do like what I'm seeing, and this also creates a nice little trend line going here. We're going to be removing that triangle, no longer needed. Let's add a trend line right here, maybe all the way from the top here. I like that. We can also add a low time frame reload zone from that high to this low. We're right inside the reload zone right now. Let's see if we can get a rejection here. That would be really nice. Let's look at the 5 minute. What is the 5 minute doing? That's a good wick in the 5 minute. Definitely shows that. I mean, the wicks are stronger to the downside than to the upside. So there are still quite a lot of buying pressure here in gold, which is not weird because we're trading short in a strong uptrend. We're trading based on, a mean reversion trade right here, which is of course not the best thing to do. Joshua says, look at MT5, we got equal lows. I'm looking at MT5 right here. I don't see the equal lows. I see a low and a lower low with that wick, especially clear on the 1 minute. Let's see what we can get here. If this 1 minute candle confirms this rejection, then I will start to move my stops down. Okay, I will, let's see. Is the 1 minute candle closing soon? Yeah, 10 seconds. Will we have a wick? I don't want the wick on this one to be too big. Let's see. I want to move to the downsides. We get about a couple of seconds here. Okay, that's good enough. Let's start adding this moving stops. So that's a $14 minus on that one. That is a 40, really 43. That's that. Okay, that's a bit too big, isn't it? Move that down. I'm gonna actually take. What if I move that TP to this level? That's gonna be a. How much will I make on that one? 26. Okay, I'm just gonna place the TP here. Okay, so I'll make like 2% on this trade if it turns out. So I'm just gonna be adding that one. All right, we got Pedro in the background. Can I add you? Let me know.
Okay.
Nice. All right, how's it going, Pedro? Welcome.
Morning, everyone. How are you guys?
Good morning. Good morning.
Happy month. So you're trading gold today?
Yeah, we're trading gold again. Looks like we're about to perhaps hit that TP. If we can break the lows. I'll be okay. That's a good 1 minute. I'll be moving stops down a little bit here. If oof, I don't like that. Okay, let's take out those lows.
The excitement.
One spike to the upside here, and I'm gone.
And one spike to the downside, and with your target.
Yep. Let's see. Oh wow, that's not a good candle. I don't like that. That's a higher low. I'm gonna close one of the positions. I'm gonna close that one. Okay, one position closed. How much did I make today on gold? Oh, is this the week? Let's see. We're gonna look at today. So we're gonna look at today. Okay, we got two winners on gold today on this account. If we can get a break to the downside.
Yeah, we'll see.
Yep.
Morning, Vinicius. Bon dia.
All right, Pedro, what are you looking at today?
I'm starting to look a little bit at well, many things happened in the last couple of days. I'm still interested a little bit on Euro Pound potential longs. So price is still kind of at that kind of demand zone. It's a level of support since 2016, basically since Brexit. That price didn't really manage to go below 0.82, if not mistaken.
I'm gonna bring up your screen and we can perhaps take a look.
Okay. Let's just check where Euro Pound is. Yeah, so Euro Pound is it's at this strong level of support basically. and the last time it was below this 0.82 mark, it was before Brexit, back in 2016, almost 9 years ago, who would imagine. So I'm still curious to see how price may respect this demand zone or not. In here, it's kind of a daily level. Price is slowing down, it's showing some weakness. It's true that continues to have some selling pressure in here, but I'm curious to see how price may react around this level. Something that I like about it is that we already, on this move to the upside, we did manage actually to break some structure, opposite structure in here. So we kind of open a little bit the potential bullishness from this level. So that's something I'll be paying attention. So we already took out these lows from this level in here, and now we're kind of managing to react. So I'm starting to add something. I'm still not in the trade. I'm waiting for price to maybe retrace a little bit more, but that's definitely something that I'll be paying attention to in here. This week we are going to have ECB on Thursday, so maybe there's some volatility on the euro pairs to be expected on Thursday. We'll see.
So I just want to give a quick update on gold. So it's close to positions right here. So we can look at the history. Three trades today. Not a lot of money, but still, something. So we broke above this level. What I see here in the 1 minute is that double bottom, and actually that right, leg of that double bottom is actually higher than the left one. And looking at 5 minute here, there's a lot of wicks here on the 5 minute. It looks like there is some buying pressure coming in here. So what I'm watching right now is basically a possible range between the highs here and these lows. And if look at the 5 minutes, it's a good support here. You can also extend it over here. And what I see is I'm gonna go short again if we break below this level, and I will go long if we break above. So I quite like the idea here of quick trades, getting in and out quickly. Of course, not a lot of money, but you see that I'm inching my way towards break even, and I was actually only 0.25% from losing this account. So risk management does work.
Yeah, now you are 100 pounds up, dollars in this case. No, 178, right?
I think the stop out is 4,500, I believe. I don't know, I gotta look that up.
Yeah, so 4,600. Yeah, it's good. It's good recovery.
Yeah, let's see what we get here.
Yeah, let's see gold. It did a good recovery the last since yesterday, basically. Also with all this uncertainty in the market, it may continue to go slightly higher. We'll see. But yeah, a lot of uncertainty in this point in the overall in the market, which can benefit gold to continue to, as a risk adverse, can continue to push higher.
Yeah, I'm starting to feel more bullish on gold here actually now. I like that there's a lot of buying pressure coming in here. If we break above this level, I think we're in for a move to the upside. I'm gonna switch over to my trading view to take a look at the levels that I have within trading view here. So let's switch over to the daily first, where we have that daily ATR above 4 hour. Let's switch on the ATR here. It did hit that 2 times ATR, but now because of the strong candle previously, we now have the 4 hour ATR, because the new levels are based on the close of the previous level. Dirk is saying adjust the stop loss to break even and got stopped out of break even. Looks like it's going to continue its journey up. Yeah, I kind of agree with that. So the 4 hour ATR is right here. So we now have a cluster of 4-hour ATR, daily ATR, very close to each other right here, and then above the weekly ATR. So I'm thinking that we're at this resistance. That's the thing. We're at it's a very clear, in my opinion at least, a very clear resistance level. But maybe this is the best one. Okay, so let me go in, and that's the daily resistance. Let's remove that one. Let's make the chart a little bit cleaner. Okay, so we got that daily resistance right here. And then we have the daily ATR above and the 4-hour ATR above. I know Victor's gonna come in here soon. I'm gonna have to ask him how he would trade this, but I'm thinking either of the ATR levels above or the daily resistance would be a good.
What is the exact level of the ATR? It's 294. Which one is it? That ATR is just so.
Let me see. Let's take a look.
Is it
On
294 something?
On what time frame?
Those two that you just marked there, the Davy and the, I think is what you just wrote now, Davy ATR. That
The daily ATR should be around
294.
2009.34. I don't know the exact level, but I think okay, it's a little bit lower, around there.
Yeah, okay.
I can add the go into settings, and I'm going to be adding the arguments for the arguments on the values. Let's move that up. How do I move
I can
that
share
up?
my text as well on Go to see.
Okay, so we have. Take a look at the ATR. No, the ADX. So on gold, daily ATX is losing momentum. We got the 4-hour losing momentum. Daily is picking up. 15-minute is quite high. 5-minute. Okay, so the 1-minute ADX is picking up. The daily is still high. 3-day is looking good as well. And the weekly is also very high. So I do believe that there's still good momentum here on gold.
Yeah, they can be. Actually broke below that one. Interesting.
Now what I'm thinking is, let's remove some levels here. Now what I'm thinking is this. From that level up to that daily resistance, perhaps even up to the ATR. And then this would be stop loss. Okay, so we got the 5-minute candle closing in 30 seconds. I'm going to enter this trade if depending on the close of the 5-minute candle. Okay, so let's open up MetaTrader. So we got the entered market, we got the stop loss is going to be here. The TP is going to be up around that area. That will be a 3.3R trade. 5-minute closes in now. That's not a good close. That's not the close that I wanted to see. So we'll have to wait. That's going to be the trade. I'm going to risking 1% on that one, 3-yard trade. And the idea would be to leave this open while I'm having lunch. We also have a trend line kind of going like that, which also makes sense to see a break above that trend line. Okay, so we're gonna wait 4 minutes, about 4 minutes until the next.
I can share my take. I can share my take on gold.
Yeah, go ahead.
Yeah, just to before gold, just finish with euro pound. Ankit is asking me if I add into my initial positions without confirmation. No, usually I do wait for confirmation. At this point on euro pound, it's a tricky one. I can actually go check euro pound just to finalize that analysis. I know that euro pound moves a little bit in a different way, in the sense that it can spend a lot of time ranging and all of a sudden can explode. I was looking at a little bit at his range. Price actually did manage to break a little bit to the upside slightly today. So somewhere around here, I'm actually going to have a buy limit order somewhere around this level. Not full position yet. I can see the scenario where price may actually still fake out these lows and only afterwards may go up. That's why I'm just starting to participate a little bit with a small percentage of my full position eventually that I want to take in here on the euro pound. So it's still building up the position at this point. But at least I finally saw the break of structure in here a little bit to the upside. But on gold, what I was looking, we actually analyzed gold 1 week ago, just before the drop. It was actually kind of a nice move to downside. This was basically the range that I had in here. In my opinion, basically gold had a lot of compression in here, so I was not really surprised that price made that move to the downside. We analyzed that 1 week ago, and now price is recovering. I'm actually looking for price to go slightly higher, or like for gold to go above this high, even though there's maybe something still around this level that gold could respect. We just took this high in here, so we just took this level slightly, so price can actually continue to move a little bit more to the upside in here. And on the lower time frame, basically what you guys have been looking for, I think this is one of the most important lows at this point. Basically that's where price has been creating highs, lows, high, and now basically this is the low in control at this point. If price does starting to break below this level, could see gold going towards this level in here, and then from here maybe could continue to push a little bit more to the upside. So as long as basically this level holds in here, I think price can continue to move slightly higher. If this level starts breaking, price could go a little bit lower, but overall in the bigger picture, I'll still like to see gold going a little bit higher. This level in here, I think is still fresh, and then you do have still that supply that was created with this manipulation that was created in here, push down, up, fake out the highs, and push down aggressively. So there's maybe two levels in here, mostly where I would like to see gold going to. This level in here, that level in here, which actually coincides a little bit with that ATR, I think the ATR, that's why I asked you the level that you had, Jonathan. I think it coincides a little bit with the same structure, somewhere around this level, above this high in reality, in here. It was a strong move. Now, talking a little bit of what's going on in the market, maybe it will make sense for gold actually to just continue to push higher and eventually perhaps get to the 3,000. But I could find some selling pressure in here, even though I wouldn't be managing my targets in terms of expecting another retrace all the way back to these lows. I'll be a bit more conservative on where I'll be looking for any targets for any potential shorts from these levels in here. Yeah, that will be a bit more of what I'll be looking for. So yeah, as long as this level keeps holding, maybe we can continue to push a bit more to the upside in here. Yeah, so we'll see. You'll see. I'll be waiting for price to get closer to this level.
So I saw the comment here from Hamid, and I absolutely agree with gold is more of a range. So because now with the 5 minute here creating a kind of like a compressed type of price action, let me switch over to my trading view, and I will show you the new setup that I have in mind is basically this one right here based on the 5 minutes. So 2 TPs where I will sell 50% of the position First level, move stops entry, and then the last position will be taken up here. So let's see if that one is going to work out. And I've just entered this trade. I don't have the best entry, but the entry is around the same as on here on TradingView. So we'll see what happens here.
Yeah.
On the 1 minute, we've see if I can adjust the trend line here. What I want to do here is I probably want to have like a trend line channel. Goes like this. This is that's the trend line. So what we see right now is price on the 1 minute creating that double bottom, breaking above the double bottom, retesting the neckline of the double bottom, and then forming a range. So this to me is bullish because we had a range here, broke down, range, broke down, range, broke above, and now creating a low time frame range on the range high of the previous range. That to me is bullish. You can't take partial profits in MetaTrader on the same position, can you?
You can.
You
you
not
can
automatic,
modify,
right?
Yeah, it needs to be manually unless you have expert advisor or something like that.
Yeah.
You can add with the expert advisor that you are using, you can add a second target, and basically it's going to just open 2 positions instead.
Yeah, I probably should have done that, but I did see the potential of having 2 TPs after exiting the position. But what I can do is just open the trade window and then just get ready to close parts of the position.
Yeah, we'll see.
It's moving quite slowly. I don't like this now because now we have multiple wicks to the upside and to the downside. So there's a lot of indecision here. A lot of indecision. Guys, let me know. Yeah, is gold a buy or a sell? Let me know what you think. Buy or sell. I'm gonna open up a poll in the comment section, so you can go in there and you can see, is gold. Let me know in the comments, and let me know in the comments if you think gold is a buy or a sell, and also answer the poll so we can see. AMC says, of course a buy, but I don't trade 1 minute. Yeah, I think looking at the overall trend, I would say yes, but looking at the idea of price hitting resistance and getting closer to the ATR, I would say it might also be a sell. All right, Benicia says it's the first time he entered the position on a real account, and therefore it's probably going to go against him. Mr. X is saying sell. All right, interesting. Let's look at the poll. Okay, so 61% is saying buy.
With Hamid, no setup for now.
Yeah, let's see.
Yeah, we'll see what's going to happen there.
Okay, let's see. We got 53% saying buy. It's very close to 50-50. Okay, it's very close to 50-50, which it's interesting, very interesting. Let's see who's right.
Yeah, that's why the market is not moving. So this
Yeah,
same
exactly.
amount of buyers and sellers.
That actually makes sense. You know, that actually makes sense. If there's equilibrium between the buyers and the sellers, obviously,
Yeah.
the market will not.
Unless one
will
of
not
them
move.
is a big one to move the market, otherwise you're going to just stay in that range.
Ryan is saying it needs to break the lower low for a sell. Yeah, I kind of agree with you, but if you go back, I mean, if you look at this last lower low right here, then didn't that break? You know, oh, maybe he means this one. He probably means that one.
Yeah, maybe.
That would, and I think that would be actually correct. Ferret Catcher is not selling until he sees the right candle. And what candle would that be? Let me know in the candle. Let me know in the chat what candle that is. Buy signal was at 8 o'clock before EU open. Look for shorts on Thursday. Oh, I like that. Like, very clear. So, okay, so before buy, yeah, well, of course he's gonna say that this buy signal is right before the pump. You know.
It was when we broke away from that range. After.
Yeah.
But yeah, I'm personally going to be waiting for price to go higher before even looking for anything. So I'm not really participating on anything right now.
I think that's the right. That's definitely the right decision to do.
So
There's
I hope I hope the buyers are correct and price actually goes higher. So
yep,
eventually gets closer to my level.
Do we have any news oh, Trump is speaking. Okay, I just gotta not do anything at that point.
Yeah, but that's later on, right?
Yeah. Oh, 3 a.m.
Yeah, it's going to be way later. Yeah.
Okay, that's in the middle of night for me.
Yeah, me too.
Right, okay. But we do have ADP non-farm. So ADP non-farm, that could, of course, move the markets if it's something completely unexpected. But yeah, we don't really have anything to worry about in the coming hours.
Yeah, today is quiet. It starts getting busier again anytime Trump speaks, but then it's going to be on Thursday with ECB, and then of course Friday with NFP. So that's going to be the main focus.
Yeah.
In terms of news this week. But of course, the tariffs now it's real, I guess.
Yeah.
So we'll see. We'll see. The retaliation is always going to happen from the other countries towards the US. Then we have oil. Oil was something that actually I've been looking for potential longs, but at this point, just because of where price was approaching and the opportunities to go long in the lower time frame existed. But yesterday, actually, we had the announcement from the OPEC members that they're going to actually start increasing production, which means that most likely the price of oil can go down. And also all this uncertainty can also have an impact in the overall economy of tariffs, which can also push the price of oil even lower. So the reality is, when looking at the chart on oil, we are at a strong level of support, also perhaps a demand zone at around this 67. If price does want to go even lower than that, that's going to be a zone that hasn't been really retested for a while now, for a few years. So we'll see what's going to happen in here on oil as well. So that's an interesting one. That's where a little bit of fundamentals might cancel a little bit what the technicals would show.
Yeah. All right, guys, we got the votes on gold is done. We got 55% saying buy, 44% saying sell. So as most of you are thinking it's going to move higher. Now, let me ask you another question. Now, you're going to get to decide in the comments section, you're going to get to decide what is going to be my target for this gold trade. Is it going to be the daily resistance? Okay, so I got 1, 2, 3, and 4. No, actually, I got 1, 2, 3. 3 questions for you. I got 1 question, and then you have 3 answers to choose between. TP number 1 is going to be these highs. TP number 2 is going to be daily resistance. And then TP number 3 is going to be the daily ATR. And you're going to get to decide. Okay. Let me pull up a poll. Where will the one that gets the most votes? I will do low time frame FTA, that's TP1. And then we're going to be selecting daily resistance, that's TP2. And then we're going to be selecting for daily ATR.
Victor,
hello.
welcome. Morning.
What's up, Victor?
Hello, Jonatan. Hello, Pedro, and especially hello, everyone in the audience. How is everyone doing?
I think they're doing very good. They're definitely enjoying our little gold live trading here. We see the views are definitely coming in hot here. We get a lot of people coming in. For all of the new people coming in here, let me advise you to go to the comments section and answer the poll. The poll is, where will Jonatan take profit on the gold trade? You can choose between TP1, TP2, or TP3. TP1 is going to be the low time frame FTA. That's going to be that one right there. TP2 is going to be the daily resistance. That's going to be that one right here. And then TP3 is going to be the daily ATR, which is all the way up here. And you will get to decide what TP I'm going to put in to MetaTrader. So I'm going to go in right now into my position. I will remove the TP that I have right now and leave it open. And then based on the vote, you will decide on what my TP will be. Funny thing is that if you select daily ATR and that TP hits, I'm gonna get close to getting through this first stage of the evaluation. But let me know in the comments. Cast your vote, and we'll see. You get to decide. It's okay. Interesting.
Is there going to be any active management, or you just take profit or stop loss?
Active management will be. I'm gonna go get some lunch, so I'm probably gonna be logged into the laptop while I'm eating. I don't know.
Trade plan. How to manage the trade. Go get some lunch.
Yeah, exactly. That's okay. So let's see. We got. I'm gonna give you guys about. I'm gonna give you guys 2 minutes to decide. So right now we got 56% leading. That's daily resistance. I think that's actually a really good target, the daily resistance, but you get to decide which one. And for all of you joining the live stream right now, make sure that you check out the text that we have here in the bottom that is scrolling through. On the 11th of March, we are having a risk management marathon. We're doing live streams every day. We're gonna have 8 expert traders. We're gonna have 6 different sessions with all of these traders talking about risk management. And the first one that signs up, the 5,000 first people that signs up are able to enter a trading competition where you can win some really cool prizes. So make sure that you check that out. I'm gonna be adding all the links in the comment section right now. Yep.
That's 1 week from now. So yeah, don't miss out, guys.
Yep, 1 week from now.
What is the risk reward ratio on your trade that you're showing there? That you're flexing, not showing. You're flexing that trade.
Well, it depends on what TP the audience is going to decide on. What I'm really happy about though is the fact that I've went short on gold inside this range, had 3 winning trades, and now I'm flipping long at just the right time. So that's a flex. That is a flex right there. Heidi, you're not getting a confirmation email. If you go in there and you sign up, then it should say like you're signed up or something. There's not going to be a confirmation email. You will be signed up to the event, and you will be getting emails later, like when we're getting close to the event. I think I'm making you proud here with adding like the daily ATR and the 4-hour ATR here, Victor.
I am. Actually, I'm very proud of you, Jonatan. I have to mention it. Thank you for pointing it out. I'm proud of you. You are, talking my language, and I think it's actually very good for traders, for people who are watching, to start thinking, if they haven't done that already, why is it important? Why would you be minding or looking at the 4-hour ATR? And to begin with, what is it, and why should it matter? It's so powerful, but it's I don't think, well, I don't know, I don't think it's gets enough exposure, at least not as much as it deserves, in my opinion.
Yeah, definitely. And what I like here is that we have a cluster between the 4-hour ATR that's quite close to each other. So the 4-hour ATR and the daily ATR is quite close, and not too far above. We have the weekly ATR as well. So there's definitely more room to the upside. I gotta say, like, the thing here with the poll is that 54% says daily resistance, this one right here, as my TP. Henry has a very good comment. He says that with such a tight stop loss, having TP at the FTA is probably the best thing to do. Okay, but I'm gonna go with what the audience has decided here, and that is TP to the daily resistance. So we're gonna go in, we're gonna look at that daily resistance. It's at 29.28. I'm gonna see what happens if I put it at 27. How much further down is that? Okay, so I'm actually gonna put it at 27 because I want to front run the level. Okay, so that's still gonna be 3.7 hour trade, which is quite good. But that's gonna be this is going to be my TP, and then I have to just put it a little bit lower, like 994. And if we break above the actually, what I'm going to do is I'm going to move stops to entry when we hit this level right here, because that's the area where I should take profit. If I would decide where to put the TP on this trade, I would have put it here, which means I should move stop loss at least to break even if that level is hit. And it's a okay. Well, I made a decision. I'll let the audience decide. Okay, let's go. Okay, guys, I'm gonna have to take a quick break, and I will be back after lunch. But we made a poll here in the morning, and they all want us to trade gold. So I guess that's what we're gonna be doing today, trading gold.
All right, I'm gonna take a look at gold as well to see if I can sink my teeth into a trade or two.
Perfect. I will see you guys a bit later.
All right, Jonathan.
Enjoy your lunch, Jonathan. Is it gonna be chicken legs, chicken feet?
Chicken feet, yeah, chicken feet and gold. Chicken feet and gold. It's gonna be eating chicken feet and yeah, never mind. See you guys later.
See you.
Jonatan, how are you doing, Pedro? Yeah. How are you doing
today?
I'm
good. How are you?
I'm fine. I can't say the same about my voice, but I'm doing well. How is it? What are you looking at for Trump's speech today? Because that is, I think, the X factor, the unknown today, right? He's going to be speaking. He doesn't speak that often to the Congress. What are you expecting?
Oh, that's a good question. I think many hints had already been announced with the tariffs. I think it's going to be most likely more of the same in terms of the hot topics that are going on at this moment. Either be the situation in Ukraine and Russia, going out of the army in there. Who knows? Tariffs as well, for sure. Is it going to actually implement them? Is what are his demands in terms of what is looking at? I think it's more of the same. Of course, he may say something new or more aggressive in this tonality, which can definitely affect the market. But I think the market is already reacting. Like you can already see a lot of volatility, and most likely it's going to be more of the same. It's going to be more of the same. It's going to be at 2 a.m. Unfortunately, I'm going to be sleeping at that time. So when I wake up tomorrow morning, we'll see where the market is. But it's uncertainty. Above all is uncertainty. It's quick moves, which is something that we need to adjust to the market. For some traders, that's exactly what they're looking for. Some other people, they may prefer a little bit more of a calm market. Seeing price, yes, moving, but in a more structured way. So yeah, it's time to adjust. It's time to adjust.
I see. It's going to be very interesting, I think, because he has been the driver, right? The catalyst of the volatility the last couple of weeks. And, his tweets, his speeches, what he does and what he doesn't do, really move the market. The market is jittery, I would call it, last couple of weeks. So it's interesting. What is I'm not gonna be trading as well because, of course, of the time of the day. So it's going to be something for the day after. But still, it's going to be interesting to see how the market reacts to him, actually.
Yeah, we have the VIX at this point at around 23, so you can definitely see that it is increasing the volatility in the market. It has been around 20, now it's 23. So when the VIX is at around this level, it means volatility. Usually also means that the US indices are actually moving down as well. So, and that can continue to increase. And US indices may continue actually to move down as well. Yesterday was an interesting day on US indices. Spent all day basically. It looks like it was recovering from the last week, but all of a sudden in the evening it just completely fell off, and we had again Nasdaq. I think it closed -2%, S&P -1%. So it came back all the way to the downside, printing another negative day in the market. And when actually we start looking at the charts, it may start looking like there's maybe more bearishness on US indices. This may not just be the end of this move to downside. There's maybe more negative moves that can happen on US indices in the year. And when you start looking at the big seven, which of course has a big impact on the overall weight of the indices, they all look like a little bit bearish as well. At least they start breaking important levels of structure to the downside, which can also eventually lead to more bearishness. So it's not just the indices, but also the individual stocks, especially the major ones. They're also not showing, at least in terms of price action, they don't look great at this point.
And when you say bearishness, how far back are you talking about? Are you talking about last couple of days, or are you talking about more than that on the equities on the indices?
Yeah, whose chart is that? Is that Jonatan's?
That is Jonathan's. Shall I put yours?
Yeah, maybe. Because when I'm talking about how much more bearishness, I'm trying to understand as well what space is available that price eventually can move towards to. By that I mean, like, if there was a big compression on way up, maybe price wants to go all the way to the other extreme. I like to draw some kind of ranges that I potentially see where the potential move of price can go towards to. That has been a little bit, for example, last week it was quite obvious to me eventually when you do start having that move to the downside, especially from the top, that there was a high probability that price would at least feel all the way to this low. And in my opinion, this low had already actually broken the low next to it, which means that then I was already looking for price to go into this structure, which we actually had a little bit of a reaction, but price kept respecting the supply. We're talking about the S&P at this point. And if price by any chance actually starts breaking, even for example below this low in here, 5,700, it can start. Maybe there's still this extreme of the demand zone in there. If I actually adjust this, there's maybe this extreme which can still hold a little bit. But aside from that, I see a lot of compression. By compression I mean basically order block or demand zone that has already been touched or spiked, which means that it's a weaker level, which means that price can actually then start moving or continue to go into the next zone. Like I'm basically starting to look where price actually can go towards to, where is the next fresh level in the bigger picture that we can start looking for. Of course, we can pay attention to support resistance as well when they're looking at. But for example, something that starts just standing out to me is maybe a little bit of this next level in here. So basically, we are seeing the highs are being respected. Basically, the sellers are holding the key levels that they need to be held to in order to continue to push price to the downside, and the buyers are not really managing to do that. So we are seeing lows being broken, and not just lows, but also some key levels of structure a little bit on the left. And you can see that on the S&P, you can see a little bit of that also on Nasdaq. I still have a little bit of this target in here, so that has been a little bit more of my bias. So yes, we had this inside range, but this is one of the next levels that price is still kind of space to go towards to. So I already broke below this low yesterday, and most likely we are going to at least see price moving a little bit more into this structure as well. And that's what I mean. If price does indeed, in this case, Nasdaq, if Nasdaq does break below this level in here, I think it starts opening the door to go way further down, and all of a sudden you are looking at a potential move from this level. Is already kind of a 10% move to downside, and then you can start opening maybe for a 15% move in here. Now, just one last point is, it doesn't mean that price, as soon as it breaks this low, doesn't mean that price will just move straight away into there. Price doesn't work like that. Price actually can maybe have a bounce before actually moving eventually towards that direction. But in my opinion, the way I look at it is that it starts opening the door for that move to happen. And that's basically the way a little bit I'm looking at. Another aspect that I like is that actually, if price even retraces all the way back to the top in here, I still see fresh orders at around this level in here that price can still use to continue to push down again. So yeah, that's just a few things that I'm looking for on US indices, and then we can even go into the individual stocks to see that bearishness that I just mentioned. But for now, yeah, I would like maybe to know your thoughts as well on US indices and the way you are looking at them.
Perfect. No, yes, what I would want to ask you before I start looking at them on my chart, for those who are watching who have perhaps a longer term holding time, and who are perhaps positioned investors, right? They're more in position trading. What is your red line? Where's the line? What do you need to see in the graph? Is there anything that you need to see in the graph that tells you, we might be breaking down much lower? Is it a close? Is it just price reaching somewhere? What would do you have something to give to them?
Where do I think the bottom is going to be, for example? Or
no. I mean, what is the test? Because in my mind, the market will tell us what it wants to do, but what is the test for you? Where does the door open exactly? Is it the close or just price?
Just breaking. Yeah, I don't need the closing. Actually, some of the best kind of breaks of structure, or engulfs as I call it, it's actually without the closing. It's actually just a small wick, and especially it can be just a small break. It doesn't need to be actually something that big. It's something that actually, for the people that are waiting for the closing, they'll ignore that signal. I will pay attention to that signal. So that's actually, and one of my favorites is actually just a small break, call it 5 pips, 10 pips maximum. Because in my opinion, the way I see it is, there was no need for price actually to break below that low if the intention was actually to just continue to go, imagine this case, to the upside. If price actually wanted to start giving signals to the downside, then yes, then it broke that level. But at the same time, as you can see, it's going to be a hidden information kind of, because everyone that is looking for the closing, or maybe instead of being precise on the level and maybe they have a wider range, they're not going to notice it. They're going to think that, okay, price is still holding this support level, maybe still wants to go to the upside. Just my experience.
I understand. So does it has to do with these sort of wicks, short wicks that take out a low? In this case, does it have anything to do with that you get an entry closer to that line? Because once it breaks and it shoots down, you know, you're very far away from the entry. You know what I mean? It doesn't have the, you said it's actually the best trades. One of the best trades for you is when it only breaks it by a little bit. Does it have, is the reason why that is interesting to your one of your best trades? It's because it's still close at the entry. You get into the trade while you're still at the, you know, close to the break. Is that the case, or doesn't it really matter?
You are meaning in terms of a breakout setup, kind of price breaks and then kind of continues? Is that more of what you're saying?
I mean, when you mentioned the price breaks, opens the door,
by
right? Breaks by a little bit, yes. How would you be trading that? Would you be waiting for it to go much higher to get in? Would you be, you know, buying it right there or selling it?
Yeah. So. Okay, maybe I didn't explain correctly. So when I mentioned that one of my best, I didn't mention trades, I meant in terms of information, collecting information for a future trade, is when we do, for example, when we do breaks slight with the structure in here, that for many people, maybe they're going to think that, especially maybe on the 4-hour day, maybe it's not a closing. In this case, actually it is, but maybe on the day it isn't. Yeah, for example, this one, right? It's not a closing in here, it's just a wick, and then price spikes up again. This for me is a sign that price actually broke a structure and it most likely wants to continue to move forward. Now, it doesn't mean that it's going to go immediately. It can maybe actually even fake out one more time the high, which is actually something that I like to see before actually starting to move to the downside. But this is something that I pay attention to. So this is more in terms of what I mentioned before, is in terms of information that I start collecting for a potential trade in the future, in this case, into the direction of the zone that was broken. So if the low was broken in here, eventually it's going to be towards a short with a potential target, which is going to aim towards this low or starting aiming towards the next level, that fresh level, which is basically, in my opinion, now this demand zone in here. In terms of potential trades in here, like I'm not really a breakout trader, which means that when price breaks a structure, I'm not going to go trading to that direction. In this particular case, I will be looking for something opposite. It's when price does break an important level of structure, I'm trying to see if there is kind of just a fake out initially, and price actually is going to start trading against it, basically coming back into this structure. And for that, I need to see a little bit of what's going on around this level. Like if by any chance, so I wouldn't be looking for price to break this low and continue to short. I'll be maybe waiting to see if price breaks this low, and if there's actually an opportunity to look for a long. And a great level to actually look for that is actually in alignment with the low that was broken. So we do have this low in here, basically just extend the line. We have the fake out in here, and usually at around this left shoulder, this line, usually there's usually some level that you can use for a potential trade to the upside, if that's the goal. Okay, now we need to pay attention to see what's going on in here. Maybe if there's actually a clean demand zone in here in alignment with that level, that becomes a great confluence. We have this left shoulder, we have maybe perhaps now a demand zone, and maybe we can look for a long. Of course, you want to see a break of structure before that, right? You want to see maybe this high actually broke some structure to confirm that maybe price now wants actually to have a deeper retracement before potentially continuing to push to the downside. So it will be almost the opposite. If you're trading the Quasimodo as you do, like it will basically try to trade this move to the upside towards this level and then to short it. Like it's basically this low, it will be this level in here. If that makes sense.
Yeah, that makes a lot of sense. I like how you have managed to read the market and understand that little bit of a break means something for price action. It tells you something. It's the market. It's a signal to you, not a signal to enter, but a signal as to what the market is trying to do or what it's most likely going to be doing next. Because I recognize that as well. The way I read the market, it may be something very subtle as, you know, just wicking a level, and it might not seem like relevant, but in my experience it is sometimes.
Yeah, I like to say that I'm playing chess with the market. So I'm not really active in every single move, even if I see something, or if I'm expecting price maybe to go towards one direction. It doesn't really mean that I need to participate on that specific move, but I'm playing chess. I'm trying to see, for example, this for me, it will be a play, that like a signal that market is giving. And I started waiting, and I'm trying to see already 2-3 steps ahead of the market, trying to see how to position myself in order to find the good opportunity. So, for example, this could be one of the signals. Price breaks above. Maybe try to look for eventually the type of approach that is going. If price is starting to show weakness on the approach towards maybe the next stop, that's maybe another clue. Then maybe it's going to be a new break of structure now closer to the top. That's maybe another clue, and eventually kind of combine the several pieces of information, and there you go. Now I have a trade that I planned. I waited for it. There's a lot of confirmations for me to look for that trade, and there you go. And then try to execute in the right moment. But yeah, I like to say that I'm playing chess with the market in a strategical way. That's my approach.
Nice. All right. So, someone asking here, maybe.
Hello.
Hey, Jonatan.
Jumping in and interrupting. So
no problem, Jonatan. Go ahead.
I need to just open up my screen because I can't find the setup on my laptop. So I need to open up the screen here from the laptop to the desktop. That's not looking very good.
Gold is also in the average time.
But have you decided on the trade management? Is it going to be active or passive?
It's going to be active. So when it breaks above these local highs right there, the FTA, then I'll move my stops to entry. And at that point, okay, I gotta run. There's something. It smells like I'm burning the food. See you soon.
See you, Jonatan.
Go manage.
Don't burn the
Jonatan burning.
What's up, Mike? Good morning.
Hey guys, someone called the local fire brigade for Jonatan. He's doing goodness knows what to his place. Oh dear. How you guys doing? I hear we're trading gold today, so I'm in a couple of trades myself on gold. So I'm in a couple of sells right now.
Ooh, nice.
I'm in a bit of drawdown.
You're trading against Jonatan.
I'm trading against Jonatan. Yeah. So he chickened out of holding his shorts for longer, whereas I'm still in my shorts. Granted, they're not going very well right now. I'm in drawdown, but I can still see us going further down. So we'll see.
I can see that too, although the momentum is to the upside right now. Wouldn't you agree? I don't want to talk you out of your position, but convince me why you're in a short, if you don't mind.
So basically, mine is based, as you know, Victor, mine is based on liquidity levels. Now, what I saw when we came up to this high here, we'd previously created this high, pulled back down, and then we've gone and created this one. Now, this one has got an inside bar here on the 1 minute, and we also have an inside bar here on the 1 hour. Further up, we then have a daily inside bar. Now, the ATR is up here for the daily. So I do believe that we're going to be long. However, the reason I'm short at the moment is purely because of this massive leg up that we had. And I don't feel like we've retested enough of it further down. So my sentiment is that we're probably going to chop around a little bit and then pull back down. I don't think we're just going to have a leg up and push further up. I think we're probably going to have a bit more of a push down. If we see on the higher time frames, on the 50-minute, for example, we're just creating liquidity, right? So right now, we're probably going to come and take this level on the 50-minute. So let me just mark that out so I know that for later, because I'm in this trade, so I want to keep an eye on it. But on the other side as well, there's a 50-minute inside bar. So for me, this trail of liquidity that we're leaving further down is just further evidence that we want to pull down. This 90-minute candle was a nice bearish move. It could end up being purely an order block, but I just feel like we've got a lot of resistance here in this area that's going to hold us up for some time. If we look onto the hourly, I think we've actually just taken that level, have we? Let's have a look. Or not yet. No, we haven't taken it yet, but we are creating inside bars. So we're creating levels of liquidity that we can come and take to then react from. So that's why I'm not convinced that we're purely longing. I'm quite possibly going to be proven wrong. But yeah, there's major liquidity down here, and there's also major liquidity further down here on the 4 hour, for example. So I just feel as though we've got some very important levels to be taken back, particularly down here. If you see here, we've got a wickless candle here. We've got an inside bar here. There's just a lot of liquidity further down. We've taken that level that I just mentioned just now. And will be interesting to see whether we push down. There's a lot of signals that we want to push down, and it's just a question of when the sellers are going to get in. Right now, we're tapping into this order block here on the 1 minute, and so this is where I'm now waiting to see if we're going to get any further sellers. If we go past this level here, then I'm pretty confident that my trade idea is probably invalidated. But as you can see, we're kind of chopping around. We haven't made a convincing move either way to suggest, right, this is definitely buying or this is definitely selling. That's my thoughts.
Like, is it that often that you, when you see Vitor, when you see a move to the upside, that you just try to fade the move just because it will make sense that price will just retrace back to the to that level? Is that something that you do often?
It depends on how much time I have, if I'm honest, and how much of an impulsive move there is. I feel as though that when there's more of an impulsive move, there's more of an opportunity to trade it. So the divergence, right? If you've got two assets really separating, you've got either a lot of buyers coming in or a lot of sellers, you're going to see a reaction to that. Because I think, as Jonatan said it earlier with Dirk on the stream, you know, the whole point of the markets is that it's an equilibrium between buyers and sellers, right? And trying to find that balance between the two. So if you suddenly have a big spike of buyers come in, then at some point sellers have to come in and pull it back down again, right? There have to be buyers for sellers to sell. There have to be sellers for buyers to buy. At the moment, right now, we're getting a nice reaction from that area that I marked out. Whether it plays out or not, I don't know, but certainly that's the kind of reaction I want to see in that zone. Yeah, we'll see how this 1 minute candle closes, but if it continues to push down, then I'll be satisfied that that we're still going to see some shorts coming in.
That's what I mean. And many people, even just Henry, mentioned that you're repeating the word feel many times.
Sorry,
it's just you are repeating the word feel. Like I feel. And that, like, you don't need to take every single trade just because you feel something.
No,
like it's more,
no, you don't.
I know that price usually does go back to equilibrium eventually. But I think you mentioned the keyword as well. It was when. And if this is actually the level that is that the idea that the gold is actually ready to start moving just by even looking on the left side, as well, in terms of that move. Yes, we did have a strong push to the upside this morning on gold, but maybe price still wants to go even higher before actually moving. I do agree with you. There's maybe a lot of liquidity below those levels that you mentioned before, further down. But is this the level actually that gold is ready? Like when you look left, like there's maybe a lot of compression, maybe price still wants actually to go a little bit higher or not. I think I remember last week, I think there was a similar setup. I don't remember now the asset that you were looking for. I don't know if it's the N pairs or something like that. Just because I mentioned again, just because it's the second time where there's a big impulse up and you're trying to kind of fight the move almost immediately. Maybe prices want to go down. Maybe it needs to just evolve a little bit more before actually.
Yeah, it can be.
It
can be. Normally, I only do it when
it will be more.
When it's impulsive.
It will be more if you are tracking actually this type of setups or not on your journaling. Because it will be interesting to know the stats of the specific setups. So,
to the comment of I feel, it's not as rigid and as structured as it probably should be or it could be, and that's something that I'm acutely aware of. I think, and I don't feel, I think, I'm going to be careful of saying that now. But I do I do base my views on intuition. You know, I've spent hours and hours and hours and hours and hours looking at the charts, and a lot of the time it is intuition. And yeah, it's something that you feel. It's something that you get a sense for. You know,
I'm with you on that, and I think that's actually part of the edge eventually of every trader is their own uniqueness of understanding the market, and it's not so restricted in terms of if A, B, C happens. You start getting a feeling, you start filtering trades, and that's in my opinion the edge eventually that the trade is going to build.
It's not something that I can easily explain. It's just something that I've learned over the last 2 and a bit years of what I see and how I see it. You know, if you look at all of us, even just in here in the trading room, each of us look at the charts in a different way. We see different things. Victor looks at, you know, at order blocks, right? And he sees things in a certain way and sees things from his data and his back testing and so on. I see things slightly differently. I see liquidity levels based on very specific criteria. You might see yours in a different way. I haven't seen enough of your trading to know your approach, but I always describe it as a bit like looking at a piece of art, is that we can all look at a painting and see something different. And it's just about how we interpret that and how we look at that and our study of that. I'm still very much what I would describe as a learner trader. By no means am I the finished article. My biggest enemy is myself, and my biggest handicap is myself and my psychology, and I know that. I'm acutely aware of that, and it's something that I'm actively working on to try and resolve. But I'm also, I think I'm quite impulsive, and I'm also quite what's the word? I'm always very eager to take opportunities and grab opportunities at the best, you know, at the first opportunity, and that's something that I know that I need to work on, because that's something I generally do in life. Is I see something, right, let's go and do it. I take action, right, let's go. Whereas I probably need to work a little bit more on my patience and my timing for things, and not take on too much all at the same time, which is again something that I see in my trading as well as the rest of my my business ventures and other investments that I have.
Well, it's a very good thing that you're aware of them, and they're not necessarily something bad, right? You just need to find where exactly is it useful, right? Because that's how you are, right? That's something that comes naturally from you. So instead of looking it as a, you know, something I'm not specifically talking to you, but other people watching this, instead of seeing things you do that you may not be conducive for profits, but if it is something, a way you are, you need to see how you can combine it, find its place in trading, right? Whether you are a slow thinker or an impulsive trader, look to see how that impulsiveness or that taking your time kind of way, how can you use that in your favor? How can you embrace it? Because that's what comes naturally from you or of you, right? So instead of fighting yourself or trying to be someone you're not, which is not in the long term, it's very difficult to change those characters. It's much better to embrace it and see, okay, if I'm someone who needs time to take decisions, then the lower time frames is not something I need to be looking, because I'm gonna be needing perhaps a couple of hours before I take the trade, and by that time the trade is not there anymore. So it's I think it's a very interesting what you just mentioned, that awareness you have of how you are and what kind of person you are outside of trading, and how you are, you know, acutely aware, you said, about it in your trading as well.
Yeah, and I'm fortunate that I found trading, I think, because I started trading around about the same time I started actually going to therapy, and therapy has made a massive difference to me, just being even more self-aware, it's I'm a firm believer that trading is not easy, and it's not for the faint-hearted, but it is something that can genuinely be very beneficial and very rewarding to anyone that gives it a go. Thanks, Matthew. I've got 2 young kids, and one of the things yesterday, I overtraded like you wouldn't believe. If you saw the Alpha Beta Lab stream this morning, you'll have seen that I overtraded like you wouldn't believe, and that was one of the reasons was because I was so tired yesterday. Now I'm deliberately trying to cut back on sugar and really I'm working on my diet a lot at the moment, but Sunday night I spent most of the night awake with my 4-year-old son, trying to get him to sleep and everything else. I didn't think about it. I was just just got to power through, just got to keep working. And it was only discussing it with Alex this morning that, as he pointed out, quite often when we're tired, we're looking for that adrenaline push. We're looking for that oomph, something to wake us up, something to give us a drive of energy. And trading can do that. You get a win, that can really give you that dopamine and that adrenaline fix that you need just to wake it up.
Mm-hmm.
It's true.
It is, but what have you learned from seeking those things in trading? Have you come to any conclusion? Like, is it something that needs to be done, or is it something that needs to be avoided? I mean, seeking those effects that trading might have on you.
For me, it's more about I've always been quite self-aware and quite emotionally intelligent, I would say, for others, but I've not necessarily put myself and my own awareness of my own psychology and my own sense of whether I'm having a good day or a bad day, etc. I've just generally been let's just power through, let's just move forward. And I think what trading is teaching me is to be more self-aware of that, as well as the therapy sessions. They're teaching me to be more self-aware. But we're talking about something that, in the last couple of weeks in particular, I've been talking about, traumatic experiences that I had when I was much younger, over 20 years ago. I've never delved into, I've never thought about, and I'm talking about it with my therapist for the last 2 weeks, and that has mentally impacted me. That has had some kind of influence over my psychology, and I've been aware of it. But as Alex even said this morning, sometimes even though you're aware of it, you can't stop yourself from trying to almost distract yourself to try and find something to take your mind off it, and that can also be part of the challenge. That's why trading can be, if you're not careful, it can be very addictive as well. You're chasing that high, from getting a win, from getting the green candles or whatever it might be. So it's definitely something I'm trying to make sure I'm as aware of as I possibly can be.
Yeah. Do you journal on a daily basis?
Jonathan's $94 richer.
Mike, do you journal on a daily basis? Is that something that you do or not?
I want to. It's something that I want to get better at, and it's one of my objectives for this year. It's not something that I've been very good at historically, but it is something that I'm working on as a separate project. I've got a much bigger, wider project that I'm working on that's related to my journaling. So trying to pull that together and work on that. But fortunately, unfortunately, opportunities have presented themselves with Alpha Beta Labs and with the live streams here. So time has become even more precious than it was before. So, as things hopefully settle down a bit more over the coming months, then I'm hoping to get more of a routine to establish things like the journaling and all those sorts of things. So, yeah.
It doesn't if you don't have the time now, like it doesn't need to be a demanding task. It doesn't need to be something that you you make it overcomplicated. It could be actually maybe just a 5, maybe maximum 10 minutes of. If it's not even related to your start, your trading, at least your emotions or how did you feel during your trading day, or just recognize and state sometimes. Because that helps in self-awareness as well, and then you can go back, you can reread it, and it always helps a little bit to bring more awareness and to see the progress that you have been making as well. And that's another powers.
That's and that's something I want to get into. It's for me, I find that I'm one of those people that likes routine. So I like to, if I do something regularly again and again and again, then it's very hard for me to then break that routine. Unfortunately, it works the same way when you have bad habits. If I'm in, if I've got bad habits, if I've got an established bad routine, let's say, it's very hard for me to break that as well. So as I say, unfortunately, I've got 2 young kids, and it's, one of them's just about to turn 5, the other one's just turned 3, and they are, let's just say they take up a lot of time and they take up a lot of energy. And I spread my energy and I spread my time across everything. And because of all of those different moving parts, it's then very hard for me to build that routine back up. So what I do know is I need some element of stability. I need some element of calm, let's say, for me to build up that routine. So it's something that I do a lot of mindfulness. I do a lot of meditation and that sort of stuff when I can. But again, it's just finding the time and finding the routine to do that. This year is the year when I start putting a lot more of that into practice. Yeah, Jonathan's going to be happy.
Thank you. Yeah, thank you for sharing everything that you've been sharing, Mike, even personally. In terms of, we just think in terms of approaching trading also in that way, since you say that you are quite busy now and a lot of demanding situations around you between family and projects. If it wouldn't benefit you a little bit more, maybe even looking at the higher time frame in your own trading instead of just doing so much scalping into the 1 minute or 5 minutes, if that would be maybe okay, since maybe try to be more comfortable also instead of rushing and taking so many trades decisions like that. Maybe that could be interesting to approach.
I am back.
There he is.
Perfect time to see that break and go. Holy shit! Look at that.
He's back to gloat, guys. He's back to gloat.
Listen, Mike, I love how you started shorting gold, and then immediately you started talking about therapy and being sentimental, and like, yep, that's it. The guy's in a losing position. I love it though. Like that conversation is it's a beautiful conversation. I really do appreciate you coming on here and sharing that. It's very personal, and it hits close to heart on a lot of us as humans, the human experience, and everyone watching, they can relate to that. I really do appreciate that type of openness, and the honesty, because we're, as traders, it's a part of our life, right? You talk about your children and your family, and we have to kind of look at trading as a lifestyle, right? It kind of goes hand in hand with everything we're doing. So if you have if you have an argument with your wife or whatever, that's going to affect your trading, right? So I think discussions like this is super important.
Yeah, and I think the other thing that I find is that, let's be honest, right? If we did a poll right now, how many guys and how many females do we have in the stream right now? The majority is going to be guys, right? And we know that across the board, men in their 20 to 35, 20 to 45 are at the highest risk of mental health issues and things like that. I don't want to get into too deep of a topic here because I know it's a live trading room, but at the end of the day, trading gives you a vision on your psychology that nothing else will, I don't think. And I don't think we talk enough about the mental health elements of trading. That's why I have my own channel, The Mental Wealth Trader, that I started a couple of years ago. That's one of the things I want to put more into. And Pedro, to your question earlier about my journaling, that's one way that I'm looking to do this year, is to actually start journaling publicly and to be publicly accountable to whoever might want to listen, to understand that and to see that, because that's going to help me, but it might also help others. I know some of you, Jonatan, I know Victor, that I've had 20 years of mental health struggles, really tough ones, and really, really dark times. But what they've taught me and what they've given me is an opportunity to talk about it, and an opportunity to try and find a way of helping others not to suffer the same way I have. Trading I think is an easy escape, but it can also be an easy escape for those who might be struggling, and it can be dangerous. So that's why I'm very, very passionate about it.
Yeah, that's what I said. It can also be dangerous because trading is so close to gambling. So it's like, it's that like you have to understand. Are you taking a trade because you're addicted to random rewards, or are you taking a trade because you're following your trading system? And it's actually, I think it's way more common that people are actually entering a trade because they're addicted to random rewards, and that's actually something that's very common. You don't have to be addicted to gambling to actually, because that's in human nature. There's something that is very, very addictive to not really knowing the outcome of what you're doing, but knowing that there is a possibility of having a really, really good outcome, and trading is exactly that. So if you view trading in the wrong mindset, then you're not trading, you're gambling, and that path is a very, very dark road. It leads to
look at the meme coin world, right? The meme coin world, where you've got people chasing 100x, 1000x, and all this sort of stuff, right? It is prime, space for people just seeking that satisfaction, high risk, high reward, and that's just, unfortunately, that's where the dark side of trading appeals to people and can suck them in. And that's where, I know all of us here are very much, of the mindset that we want to give a different perspective and give people a more realistic and genuine and authentic perspective on trading that can be beneficial, that can give you the financial rewards that you want, but also maybe the psychological rewards. It doesn't have to just be financial.
Man, I love this discussion. This is the kind of content that I think everyone needs to hear, every trader, because this is real. This is the real struggles and challenges, things you as a trader, and everyone, not just Mike or myself or anyone in this room. No, everyone at some point, and maybe even continuously, will have to face themselves, their flaws, their psychological difficulties, and it's such a real thing, and psychology is such a big element and aspect of trading. I love this discussion, man.
I'm moving stops up on gold, so you saw that I hit that FTA right here, and the plan was to move stops to entry if we hit that FTA. Now, actually, what I did was I took half TP here because I don't trust you guys. I don't trust you guys in the comments. I don't. So I need to follow my own ID here, taking half profit here and letting the rest run, which means that this trade is still going to be like 1.7, and I risk 2%. I risk 2% on this trade. So yeah.
Did I hear
you daredevil, Jonatan?
I did.
Did I hear 2% on of the balance?
Yeah, what else?
This is gonna end up being another one of those clips where Victor says, "Why did you long that?"
Oh, that was so fun, man. I gotta see if I can find that. I need to see if I can find that. That was hilarious. That was hilarious. Yeah, but
gold
that's
gold is looking well, though. I need to give it to you, Jonatan. It's looking solid so far.
Yeah.
I don't know. Of course, I haven't done the analysis, and I haven't taken any positions yet. But it does look, it has all the looks that it wants. At least through the lenses that I look at the market, it seems like it wants to continue higher.
Yeah, but this is where I should take profit. That's just side. I'm happy I at least took 50% profit, but this is definitely where I should take profit on a trade like this.
Why is that? Why do you think here is the place?
Because if maybe I'll take that back. It looks pretty good.
Well, let's let it run.
Well, okay, so now
forget about it.
I can explain to you why.
I mean, it is at an FTA. It makes sense to take half off at the FTA. It makes a lot of sense.
Yeah, but also look at that. That's the 0.702. 0.702.
Let's go on to the topic of peer pressure in trading and how other traders can influence your decisions.
Yeah, well, that's also quite a real thing. Trying to not being effective. But anyway, look at that level. That's a good level. That's a resistance level on the daily. That's a really strong resistance level on the daily. It's right on the 702. Go down to the 1 minute. That level, it's right here. That level is right here. Like that's such a good resistance level. It's the FTA on like it's such a good level. But then again, like taking profits here on all the trades, then you're not going to have any big winners.
Yeah,
you need big winners.
Awesome.
Ashley Singh says close half a trade. That's actually what I did. So that's a really good suggestion. Ashley's actually going to come on the live stream later at in about 1 hour, I believe. He's going to come on and trade live with us with Victor. It's going to be joining Victor for a session where I believe they might be talking about order blocks. Order blocks and ATR.
I'm not sure. Maybe.
Oh, I forgot about the Quasimodo as well. I love that every time you come on and start talking about the Quasimodo pattern, it's like someone in the chat like, what's this Quasi he's talking about every time. We got to educate them. It's the Quasimodo pattern.
Gladly do so. There is something though I want to share with you. Jonatan, where's the daily ATR according to what you've measured?
Let's take a look. Where is the daily ATR? Oh, I got so many. I'm gonna put all of these indicators on just to get a couple of comments. When we put all the indicators on, and we're gonna get the comment. Oh, I'll pull up the stream. I saw you have many indicators. I'm out. You can't trade. You know those comments. So let's see if we get that today. So where is the ATR? The daily ATR in pips is around 400, and it's at why is there two levels? Look at this. You see, Leroy? That's what I'm talking about.
Leroy's
the candles. Here we go.
Where's price?
Yeah. Okay, so ATR. I believe the ATR is at 2,933, right? That should be correct. Yeah. But the beautiful thing about TradingView, all you have to do is just double click, and boom, there you go. That's all the indicators. And then if you want to check any of the indicators, just double click the chart, and then you have them all here. And if you want to look at, for example, only the ADX, then you remove these like that, and then you increase the length of the ADX, and then here you have the ADX. Perfect. That's
and this guy just tells you how much of a professional Jonatan is, that he has literally possibly the highest subscription on TradingView possible with so many indicators available. I keep getting stopped out with 5, and Jonatan, I think I didn't even count how many you've got there. I dread to think.
Oh yeah, I have I might or might not have a specific deal with TradingView, because I also have 800 alerts running in the background. You can look at my alert list right here. I got all the alerts here, just quite a lot.
And they're all active.
Yeah, I got all my indicators.
And he trades them all.
I do actually. Gold actually holding the 20 EMA quite nicely here. Why is price not okay? You know when you have this.
But before you continue, the bottom line was that the ATR was telling you that the 100% ATR move of today was 29.33. Did I hear that correctly?
Yeah, 29.33 around that area
33.
daily.
So basically, according to what you just looked up, price has about, what is it? About $11 still to go.
But that's based on the previous.
Yeah,
I don't know. That's
based on the
previous
average.
day. Yeah, it's based on the previous day, and I.
Just the one day? Is it?
No. It's based on. It's not taking the current day into account, of course. It's just based on the close of yesterday's candle, and then I guess 14 days back. Why is it 14 days though? Why does it have to be 14?
That's the default setting, of course. But it's up to us to see if that's adequate or not.
Yeah, I have to try that. We obviously have to adjust it to specific market. But I'm trying to understand how we can come up with the most optimal length of measuring the ATR. The 14, I like 14. It's 2 weeks, but it's not 2 weeks because there's not 14 trading days in a week for gold. So it's like 2.5 weeks.
I think I used to use 20, measuring just a day. So it's almost a month.
Well, maybe we can look at like 20.
Just 20.
But in the meantime, I'm gonna take an hour off. I'm gonna come back in about 55 minutes or so. Wish you all guys have a lot of fun while I'm absent.
Yeah, MasteRisk. By the way, I looked at the spreads. Victor, thank you for joining. See you soon. Sorry about that. I looked at IC markets. Yes, the spreads are a little bit better than what we have, but it's such a tiny amount that I do worry about your trading strategy. If you need to have, like, if that difference makes sense to you, then you are trading a very, very risky system, my friend. If you're looking like a couple of pip stop loss, that is, that's risky. Chicken feed. Yep. Victor got chicken feed. Oh, AI says, Jonathan, your method gives me hope. Well, I'm glad that my method gives you hope.
He gives us all hope, AI. He gives us all hope.
Yeah.
Jonathan is the hopeful trader.
So this is a really, really good comment. I see that someone has watched the risk management video that Victor uploaded. I'm trading an evaluation account, 5K evaluation account right now, and I do not care. I'm ready to lose it. Full transparency, I bought this evaluation account with my own money. Yeah, I work for the 5ers. Obviously, I can probably ask Saul to give me a valuation account. That did not happen here. I bought it with my own money, which means I'm gonna lose whatever amount that is. Maybe, is it $90? Is it 90? 5K high stakes. How much is that?
5K high stakes, 39.
39.
Yeah,
$39.
That's cheap. Why did I go for that one?
time to gamble with even more.
Been able to get it. Wow. Okay.
Oh dear. That's so funny.
Time to double the risk.
I want to start a hyper growth. I believe I want to start a hyper growth. How much is that? 5K hyper growth? But it's 260. That's way more expensive.
Yeah, because it's technically a 10K because it's a one phase hyper growth. So you start with the 5K and then you actually get 10K funded.
Right. Okay.
You get paid quite quickly, so I think.
And it's
I get paid for what?
Scale up.
I think you paid you paid you get paid after the first time or something like that.
Yeah, so any profits you make
quickly
from the first phase get kept. You don't get paid out quicker. Payouts are still 14 days.
Yeah, I mean, in terms of the amount of challenges that you have to do, is just one time.
Yeah, you start getting any profits you make from phase 1 are kept and are rolled into the funded account on the funded account.
Mm-hmm.
Should we do a like a quiz, like a short little trading quiz? Do it.
Ooh.
I'm gonna put something together here. Let's do a little quiz. Let's do a little giveaway. Let's give away 10 hub credits, and obviously I want you guys to make sure that you like the live stream, subscribe to the channel, tell that YouTube algorithm that this is the place to be. This is where stuff. This is where all the good stuff is. This is where we talk about almost everything here. Sometimes we talk a lot about things that has nothing to do with trading, which might be a great idea, might be not so great idea. I feel like I don't know what to say.
USD
means, like,
CHF
say
right
something.
now. Have a look at the USD CHF, Jonatan.
Look at what?
USD CHF.
USD CHF. No, I don't want to look at USD CHF because I had a trade on USD CHF. I was short on USD CHF.
Were you?
No way. Are you kidding me? I can't believe I closed the trade on USD CHF. Okay, what's the actual trade here? USD CHF? Oh my god, I can't believe I closed this trade. God damn it, man.
Oh dear.
Yeah.
Oh, Jonatan.
It's a good move. It's a lot of negativity.
That's a really good move.
It's a great move to close that trade when you did.
Yes. Yeah, look, Henry, that's why exactly. That's why I asked you if you're still in. Yeah, thank you. Are you still in? I'm in. I'm already in. I'm still in. I didn't close it. Wow. No? Okay. All right, let's go. I'm in.
There you go.
I'm in 100 pip profit here. I'm in the trade. I'm in the trade, guys.
There you go.
Let's
drama
go.
of 5ers trading.
Wow, I'm in the trade. Am I in USD CAD as well? No, I closed that one. Okay, let's actually take a look at what positions I'm in. I'm in this one. Yes, I'm in AD CAD. I closed USD CAD. I'm in NCD USD. That one looks really bad. I'm also in NCD CAD. What else am I in? I'm in the S&P 500, which obviously I don't know what this is doing. I had a wonderful entry, but I might add some to this actually. This is a really good level to go long. Yeah, no, actually I'm already in with I think like 10% risk on this one. So better be a winner. Because this is the type of trade that will like make my whole year. This is his TP, I'll make 30% on the account, which is more than I did last year, actually.
Wow.
Let's hope I don't get stopped out. That's a big position for sure. Okay, let's not look at that one because this is I'll start sweating when I look at this one. That one we're gonna move away from. I'm gonna lose 10% of my whole account if I. Oh, look at that. We're looking good on the 1 minute on gold. Lyrics Messiah. It sounds like you're a rapper. I'm not a gambler. I'm a trader. And I'm a trader risking a little bit too much on this trade, but that's okay because every time the S&P 500 hits a high time frame support, I go in and I go in big because this is what makes most of my money, if I'm going to be honest, buying high time frame support on the S&P 500. If I lose, yes, I'll be crying in the bathtub, probably. But I don't care.
You live by the sword, you die by the sword.
Yep. Well,
Let's see.
all right. Well, this definitely gets the comment section going. Yeah, you're right. Oh my god, I'm gonna have to remove that comment. Keep it professional. Did I say 10%? I meant 1%. Can't believe I'm still in this one. Amazing.
You're welcome.
Thank you.
Great. The best thing actually, if you didn't know yet, because now you're going to start active managing the trade. So it's that situation where you don't know that you are in the trade, and then you just realize that it hit your take profit.
Yeah, that's that's my swing trading approach, right? I enter a position, and unless any of my alerts gets hit, I want to, I want to look at the positions. However, USD CHF did give me an alert to close the position, and probably what I did was I looked at the alert and I'm like, okay, I'm gonna close USD CHF, and then I moved on with my day. Mm-hmm. And in the back of my head, I'm like, yeah, I've closed the trade. Obviously, I got the alert and I said I'm gonna close the trade. It's probably closed. I didn't close it. I'm happy I didn't.
Perfect. Yeah.
I'm very happy I didn't. Bobby Forex says, are we buying gold? We're in gold.
Did we just... What just triggered gold just now? Look at the 1 minute on gold right now.
Well, okay, so let's take a look at... Oh my god, look at that. S&P 500 moving down as well. Well, probably Trump did something. I'm going to have to go in and I'm going to see, what did Trump say? Trump do anything?
Has anyone checked if there's a TradingView Trump indicator? I'm sure somebody must have built one by now, where there's like an indicator that says Trump shipper, no.
No. Okay, well,
it must be some kind of indicator where things pop up on your screen and says Trump said something.
Well, okay, so earlier today, something about Putin and Trump and Iran nuclear talks.
Yeah, but
that was 12. That was about an hour ago, so that's not now. What is this? Clarity funding? Interesting. Maybe you've forgot to change your YouTube account. But in the last 100 candles or 1,000 candles or 10,000 candles, how many red candles and how many blue candles close?
It sounds like a math problem.
This is a trick question. I don't know if I'm... What do you mean? Oh my god, S&P 500 is moving lower. Could maybe Trump come out and say all good?
The Royal Bank of Canada, I think it's the Royal Bank of Canada, RBC CEO, says Trump tariffs are a wake-up call for Canadian resources.
Yeah, no shit.
Anything to do with it? We will see. Has that got
anything to do with it? Definitely a wake-up call.
Henry's got a good idea for you, Jonathan. Use the Mare indicator.
Yeah, I actually do have the Mare indicator, if you don't know what that is. So we got the Mare indicator right here. Where is it? Okay, that's not the right one. Let's see.
Is this the quiz question?
Yeah, that's right. We're gonna do a quick little quiz here. Okay, you guys gonna take over for a minute. I'm gonna create a workout a course here.
Jonathan's going to work out something fun and exciting for everyone to do. So Pedro, what are you in any trades today?
No, unfortunately I missed the entry one on euro pound to something that I was looking for. I was like 2 pips away. Didn't get filled on that one. The price is just moving up as we speak. It was a position that I wanted to start to potentially build. I think euro pound is in a good level to potentially see some buys. Yeah, so I'm waiting to see what will happen in there. And now basically price broke key levels: euro dollar index, pound dollar. So we'll see where the next key levels are going to be. Someone is asking about Aussie dollar. I think someone is asking about Aussie dollar analysis, which that we can do perhaps.
Aussie dollar.
Yeah, so, and also ZCapZ mentioned that I think he's short from the top on the S&P. That was a really good trade. I kind of agree with your analysis, and I agree with your target as well. I think 5775 can be an interesting one, and you can even go lower, to be honest. But that's a good target as well to look for. So if you are long or short, I mean, since around 6,100, is that more or less where you are short from? That's a beautiful trade.
Yeah,
but I saw also kind of the week off distribution in there on top as well.
M76, no, he did not have this kind of impact on the markets, and neither did Obama. Last time Trump was in power, he definitely had this kind of impact on the markets. This time he's got his Truth Social and he's got his X accounts, yeah, the markets react to his thumbs and his typing. Does anyone? I'm curious. Do you think he types all those tweets himself?
I mean, no. So actually, what he has personnel following him, or this is true. He has people following him along everywhere he goes, and actually types in the things that he says throughout the day. So it could be in a meeting.
Yeah. I can't imagine.
Yes, he could be in a meeting with the media and he said something and it's like tweets it out, you know, it's like this is cool, you know. It's weird.
I can't imagine, like, you know, any other. How old is he? 79 or something, or 80 or whatever he is. I cannot imagine anyone else that age being able to tweet on their phone. That's why I
read somewhere that he tweets like 50 to 80 times a day or something like that, like all the time. But it's does he really do that? Nah, it doesn't do that. That's way too much, isn't it?
It's just crazy.
Okay, how many tweets does Donald Trump Twitter account have?
This is how you distract Jonathan, is you throw out random questions. Sorry, I'm going back to Aussie dollar. So Aussie dollar at the moment forming a nice bullish engulfing candle, reacting off these lows here, falling in line with weakness coming into the dollar, and the dollar looking very, very weak generally across the board. If you look at the heat map, you can see that the dollar is red. So yeah, unsurprising to see the Aussie dollar showing some strength. It's forming a very, very nice position for swings, I would say. You've got a reaction off this engulfing on the 22, heading up, and certainly nice position there. Let's have a look further out. Is it ready to go straight away? I don't know. That's the only thing I'm not entirely certain of, because this here on the 11-hour opened as a wickless candle, which means it will also be wickless on, let's see, not the 4, not the 3, not the 2, it should be on the 1. There we go, on the 1 hour. So you've got liquidity there. You've got liquidity here on the 1 hour as well as an inside bar. So technically we're still within this range. So I'd probably be wanting to see, if I was doing an Alex move, I'd want to see us break this level. So something like this coming up, and a retest and get in at this level here to then buy further up. but there's these levels here that might get retested first for major liquidity. So wide time bias, I would say we're in for buys on Aussie dollar US dollar. But I'd be cautious because just we're still within this range here, so it may range. You know, there's no guarantees. M76, I can't believe what he did on Sunday. I was in a short on Bitcoin expecting retrace after failing to break resistance and creating lower highs, and then he comes in and yeah, I know, exactly. Shannon, don't worry, that is not the quiz question. Jonathan is still working on the quiz question. I'm sure it's going to be a doozy. Alex's move is now, says
what's a doozy? What does that mean?
A doozy, have you not heard of that word? It's like what's the word? How do you explain a doozy? It's like, oh, that's a good one, that's a doozy.
All right, yeah, definitely going to be a doozy.
Let's have a look.
Interesting moves as well regarding to the Aussie pairs. Is on the Euro Aussie and Pound Aussie, there was a massive move to the upside in the last few days. They're actually now approaching maybe interesting levels of potential resistance or supply. But there was a massive move, even maybe bigger than what you had on the Aussie dollar, which was interesting.
Well, take a look at gold. Look at gold. What's happening here? Before we go into the actual quiz, I'm going to run a quick video because you guys know that we have an amazing risk management marathon stream coming up on the 11th of March at 9 a.m. GMT, I believe. And so if you sign up to this event, right, you go to the make sure that you go to the description of the live stream. We also have the links in the comment section. If you sign up, and you'll be able to enter a competition where you can win, quite amazing prizes. You will win evaluation accounts, hub credits. We have some really cool stuff to give away. And here's our lovely Alex explaining all of this.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts, and 6 live hours. So on March the 11th at 9 a.m. GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstrations. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10k high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.
Man, he gotta get rid of those glasses, man. Let's hope it doesn't see that.
What's wrong with glasses? What you got issues with glasses?
Well, you look beautiful in glasses. I'm not saying okay, Alex looks good in glasses, but it looks better without them. You, however, you have the face for glasses.
I'll take that as a compliment.
Yeah, man. Okay, let's see if I can remove that comment, and then we will go into. You should be a news. Yes, exactly. He looks like a news presenter. That's exactly what I'm saying. Be a news presenter. Okay, we're gonna do the competition here, right? Okay, guys. So what I want you all to do is I want you to get ready. You got 1 minute to answer a question, and one of these questions is a 2-point question, which means that if we have different people answering all of the winning all of these questions, then the one that has the 2-point question wins. This is just to make it easier for me to actually pick a winner. Okay, so here we go. The first question, I will be sharing my screen. You got 2 minutes to. No, actually, the first one that gets it right will win. So what you have to do is you have to write 1 and then the letter of the answer that you think it is. Okay, so if you think that the answer to 1 is C, then you type 1C. I'm going to share it right now, and we will begin. The winner will get 10 hub credits. Yeah, okay. That work? Looks like it does. Okay, Number one, what does a rising wedge pattern typically indicate? 1, a strongish bullish breakout. B, a continuation of an uptrend. C, a market in consolidation. D, a potential reversal. And just give me a second. I gotta switch windows here. Switch tabs. And get a better. I need a better way of doing this in the future. All right. What is the what's the correct answer here? So we have a lot of different answers here. Hamad saying 1D. What do you think? What do you think, Mike? What's a rising wedge? What does that typically demonstrate?
I don't know. I don't look at these patterns. I've never I genuinely have never. I've never studied all these retail patterns.
Yeah, that's okay. Like you don't have to. Like you can be quite a successful trader.
I would say a rising wedge pattern typically indicates a potential bearish move.
Exactly. So what you usually have is you have an uptrend, right? So you usually have a strong move to the upside, and then you have a rising wedge pattern, and that typically indicates a slowing in momentum and a consolidation before a potential bearish reversal. So the biggest it has the biggest chance of breaking to the downside. So the winner is the one who first typed in 1D.
Look at Meta on the 4 hours time frame. Take a look at Meta on the 4 hours or daily time frame. You'll see a wedge. Meta.
Meta? Oh,
yeah,
Facebook. Like Facebook. Yeah. All right.
Meta stocks.
Let's take a look. Is that supposed to be a rising wedge?
Yep. If I see it correctly. Zoom out. That was moving there. You put the trend line up and
I believe
that is on my chart. The way it depends on your algo. Do you have algorithm chart? If you see my chart, I cannot see it.
So basically, this, right? That's the wedge, but actually broke out. So it broke to the upside. But I believe that for this to be a traditional wedge, you have to have like a strong move to the upside, entering that wedge like this. Then you
on my chart. I think on my chart it depends also if you are using logarithm scale or not. Maybe or not, because now you can exactly use that flow.
I see what you mean.
But yeah, tendency. If now Meta actually breaks to the downside, now it's kind of spiked up, but now if it actually starts breaking that most recent low, that can be quite a bearish move, potential move that you can see.
Yeah. I have a better
one.
Says
there's one on Bitcoin.
Yeah, what time frame? Like what time frame is that? This is the failed bullish flag. So where do we have a wedge? Okay, let's not look for that. Let's continue with the actual quiz. So the first winner is Andre. First one is Andre. According to the example of Meta, then B would be the right answer, but it's not.
U.S. Treasury Secretary 5 minutes ago came out and said we will do bank deregulation. So
bank deregulation. What does that mean? That should be bullish for the market, right?
Theoretically, yeah, I guess.
Yeah, I guess S&P 500 is not liking that though. Well, it is finding something, whatever. Question number 2. Get ready, guys. The first one to get this one correct will win. I'm first going to read the question and then, okay. This is a good one. What is a death cross in technical analysis? Now remember, death cross is something specific with specific indicators. Lil, you're obviously, you can't just write 2C. Like, you're not one who's writing now. Exactly, you're getting banned. Thank you very much. If you try to game the system, you're out of here. What is a death cross in technical analysis? Is it A, when a 20-day moving average crosses above the 50-day moving average? B, a sharp decline in trading volume? C, when the 50-day moving average crosses below the 200-day moving average? Or D, when the RSI drops below 30? Let's see who gets it right. So, okay, Mike, do you know this one? Pedro, do you know this one? What's a death cross? You can't Google. You can't Google.
A death cross is when I wake up and look at my E&L and I feel like
and
it's
your
time
eyes
for me to go back to bed.
Eyes cross. Yeah. No, so a death cross is typically known as one shorter moving average crossing below one long-term moving average. But that's not correct. So the death cross is typically when the 50-day moves below the 200-day. That's and the golden cross is when the 50-day crosses above the 200-day. So death cross with EMAs is not just a bull and bear cross. There's a difference between a bear cross and a death cross. So death cross is when the 50 crosses below the 200 and no other one. Okay. Death cross is when you open a trade on NFP and the candle crosses your stop loss, but the order is not closing. That's kind of... Is that the first one?
It is.
It is. All right. Perfect. We got Pierre. I think it's Pierre. Very bad at pronouncing names. That is... Okay. Question number 3. I should do a 2... And then I should do a 3 below this one, so we actually know. Okay, this is a 2-point question. Okay, this is a 2-point question. So the one that gets this one right will most likely win everything. Okay, let's go. Which economic indicator is often used to predict recessions? A, unemployment rate. B, corporate earning growth. C, inverted yield curve. D, GDP growth rate. Okay, so interesting, very interesting. Okay, so one economic indicator that is known to predict recession, and if you look at all the previous US recessions, there's one specific indicator that has been widely known as the recession indicator. While all of these options can signal a recession, the one that usually is called the, is recession indicator is the inverted yield curve. So that's a C, 3C. See who was the first one to get that one right. I believe it was Vinny. Wait, did he win another one? I remember that name. It did. Let's see. All right, now, for Pierre and Andre to win, they need to answer any of the two following questions first. Okay? Let's see.
No pressure, guys. No pressure.
No pressure. I want Pierre and I want Andre to focus. Okay? Focus. Don't do anything stupid here. Like, don't write it before. Okay, interesting. VIX. You guys know what the VIX is? You guys know what the VIX is? Okay. What? If you write 3, 4, and something, then you're cheating. You have to actually look at the options before you answer. Number 4. What does a rising VIX volatility index typically indicate? A decline in market volatility. B, higher dividend payout. C, increased market uncertainty and fear. D, a bullish stock market. I don't actually like.
Is everyone
I don't
writing
like
more?
I haven't marked out the correct answers on this. So and this one I'm like I'm reading it and I'm like I got to think here. Okay. So hopefully I'm not wrong here. So what does a rising VIX mean? It's not a declining market volatility. It has nothing to do with dividend payouts and it has nothing to do with a bullish stock market, but it definitely shows an increase in volatility is what I would say, and that volatility also brings in most cases uncertainty and fear. I have to say though that it's not the best answer. It's not the best answer, but the VIX or the volatility index is something that you also call the fear and greed index. So a lot of the fear and greed index out there are based on volatility VIX readings. So who was the first one? Was it Grace? Okay, it's Grace. Take a look. Okay, I'm just gonna go ahead and let Grace. Yeah, we got Grace on question number 4. Okay, so we got 4 people right now who could potentially win this. Question number 5. This is a very disturbing question. Okay, very, very disturbing question, and it's about an animal, and it's actually about a dead animal, and it's such a weird thing. Such a weird thing. Number 5. What is the main characteristics of a dead cat bounce? Number 8.
Number 8.
Number A. A breakout above a key resistance level. B. A long-term bullish reversal. C. A temporary price recovery in a downtrend. D. A stock that reaches new all-time high. Okay, what is a dead cat bounce? Now let's talk about this. Why is it called a dead cat bounce? Pedro, why is it called a dead cat bounce?
Isn't it something to do with a cat having 9 lives and so it bounces back or something?
No, you know what it means.
First time I've heard it.
Okay, a cat that's alive, usually kind of like you could say that it bounces. A dead cat doesn't bounce. You drop it and it doesn't bounce. It's dead. Okay, and therefore it's just a temporary price recovery in a downtrend before price then continues to the downside. It's a fake bounce, which is, I can't believe that it actually exists a pattern based on dead cats not bouncing. Very disturbing, like I said. If you're a lover of cats, you probably don't like this pattern. You know?
It's just, why talk about cats bouncing? Surely it should be like a goat or something, shouldn't it? Like goats bounce more than cats.
Why? Why?
Well, goats just.
Yeah, it would make more sense to say like a dead bull bounce. Like that would make more sense.
Or a dead bear bounce, more like.
Yeah,
no, dead bull.
That would make more sense. Okay, who's the winner? Correct answer is 5C.
I got Grace.
Again? Really?
Yeah.
Okay, so we got 2 winners. We actually have 2 winners. So okay, so I gotta have to. Okay, so I'm gonna come up with a last question. Now the only ones that can answer this one is Grace or Winnie. Okay, I'm gonna come up with a Vinny. Yeah, Grace or Vinny. Did I say Winnie?
Yeah.
That's the difference between Winnie and Vinny.
He might be Winnie later. Depends if he answers quick enough.
I guess I actually have to write up the questions. Just give me a second.
Pressure.
Okay, I gotta think. This one is gonna be difficult.
Meanwhile,
I am looking at pound CAD sell opportunity.
continues to go up.
It's continued to go up, but yesterday we had this massive push.
Yeah.
So that's why I'm looking for sells at the moment, because we're still a long way off the 200 EMA on the 15-minute. We've crossed over, broken out of this structure here, and so looking at the break and retest on this one. So coming back to retest this area potentially. So we'll see how it.
Yeah, I'm ready for the last question here. Grace.
Jonathan's
Okay,
ready.
so we got Grace in the comment. We got Vinny as well. That's all up to you guys. I'm gonna bring up the question right away, and it's all up to you. The first one of you two who answers correctly will win 10 hub credits. Let's go. All right, let's do this. What does a negative divergence between price and the OBV indicator typically suggest? A strong bullish momentum is building. B, price is likely to continue its trend. C, a potential reversal or weakening of the trend. D, volume is confirming the price movement. Okay, Vinny, oh, nice. Okay, so Vinny says 6C and Grace says 6B. Okay, so Void says a banana. You win. Okay, so what is what is a negative divergence between price and OBV? So basically, a negative divergence means that the OBV is weakening while price is strengthening. So we see price is in an uptrend while the OBV is in a downtrend. Now the OBV shows an uptrend if there's more bullish volume than bearish volume. That's how the OBV works. If OBV is an uptrend, that means the bullish candles, there's more bullish volume basically in bearish. So what it means is that the bullish trend in price is showing signs of weakening and a potential reversal, and the OBV is actually a really good indicator to look at divergences between OBV and price. So the correct answer is C, a potential reversal or the weakening of trend. Grace, you answered 6B, while Vinny answered 6C. Okay, so the winner of today's quiz is Vinny. Congratulations, man. Now, what I want you to do is I want you to send an email to jonatan.r@the5ers.com, and I want you to do that right away during the live stream, because I will give you further instructions in that email. What you have to do is you have to write the code that I send you in the email to confirm that you're actually the person sending the email. And then when we have your email, we will give you 10 hub credits. And if you like free hub credits, you're gonna love our risk management marathon that we have coming up in this month. In 1 week, actually, just 1 week from now, we're going to have the risk management marathon where you can win hub credits, you can win evaluation accounts, and lots of other nice prizes. So make sure that you sign up to that event. We have the link in the comment section. Philip says, why you not operate only price action? Do you need indicators? Some people need indicators, some people do not need indicators. There's no simple answer to that, really.
Nothing wrong with indicators, I don't think. You know, I see indicators as a tool to analysis, just like TradingView is a tool to analysis. An indicator is simply a way of looking at the charts and looking for opportunities.
Yeah, I mean, indicators is price. It's just most indicators is just a different way of looking at price. What is happening on gold? Ooh, look at that. Yeah, I mean, so indicators are super helpful. I believe, new traders that doesn't have the knowledge of how an indicator works, they're gonna say things like, you don't need an indicator, you can just trade with price action. But why why don't you want, like, why wouldn't you want an indicator that could, for example, like, look at volume. Volume's an indicator. Wouldn't you want to know if there's like a big volume spike? If there's like a huge buy, look at the stock market. If there's a huge buy in an accumulation range within a short time period, you could be sure that that's a big player. That could perhaps be an institution accumulating that stock. Wouldn't you want to know that? Like, that is valuable information. Wouldn't you want to know that the OBV, for example? Wouldn't you want to know in an uptrend if it's more bullish volume than bearish volume? Like, that's volume confirms price. That's an underlying foundational knowledge of technical analysis. If you have no knowledge of how volume works, then you're missing out. Of course, you can use trade with price action, but you should have the knowledge to at least try out your ideas. I mean, I'm a price action trader, okay? I'm a price action trader, but I love technical analysis, and 90% of technical analysis is indicators, you know? So for me to get a good overview of what's happening in the market in terms of technicals, there's a few indicators that you can find in price. You can't find volume in price. You can't really figure out the ADX. I mean, what if you want a moving average on the ADX? Like, the MACD is quite an advanced calculation. You're not going to find that in price.
Completely agree. Who was asking about pound JPY? Andrea. Pound JPY, I can see why. It has been selling off. I don't think we're necessarily there yet, but that's just my view, because we've still got more room to go. We've broken past these previous levels of support, and we're now breaking down into this area. So you might see something come in, but generally speaking, you've got a lot of bearish momentum coming in. So I would be careful trying to catch it. I'm personally looking for sells on pound CAD still. Just waiting to see how it plays out on the 5 minute. In fact, we've got this level here and this level here, this one on the 5 minute and this one on the 5 minute. Those two are areas. So just in this area, I'm expecting price to make some kind of reaction. So somewhere in there. For the pound CAD, not entirely thrilled by this price action here on the 200, suggesting that we're going to be pushing up, but we'll see how it plays out.
That's Vinny, that's right. Okay, so you confirmed. Congrats, you're confirmed, and you're now the winner. So I'm gonna add 10 hard credits to your email that you used to email me. So congratulations. We're gonna be doing more of these trading quizzes going forward. I think it's a cool way to, and I'm also gonna try to set up a system where it's not about the one that is actually answering first. I might need you guys to actually type out the answers. So I'm not going to give you any options. You know, I'm actually going to have you explain in the chat what the correct answer is. So, you know, that removes the whole idea of trying to get lucky. So if I ask you, for example, what's the survival bias in S&P 500, I want you to explain it in the comments. And if you are right, then you'll win.
Felipe's asking, do you think a trader who uses this trades better than one who uses only price action? I don't think that there's one way or the other. Personally, I think there are, just like everyone has a different ability to look at things, there will be some people that can trade a naked chart far better than somebody who can trade one with a bunch of indicators. It just depends on how you see it. Personally, my personal view is that you are either a good trader or not based on your psychology and whether you can self-manage and risk manage appropriately. If you can't, then that's the biggest hurdle. because how you analyze is really the question. What we're talking about here: do you analyze with indicators, or do you analyze just with your eyes? You know, so you could turn around and say, right, well, okay, I'm gonna look at the candles, but another person might look at the lines. Right, it's the same principle. You know, so it's just, for me, indicators are just a different way of showing market sentiment and what's happening on the market. None of them are going to give you the golden chalice of, oh look, here I've made $1 million or whatever. That's not how indicators work. But there is
like to believe
an endless way of trading.
Yeah, I'd like to believe that, look at trading as potentially could be like the mental equivalent of a high performance athlete. And then you ask, look at runners, right? It's like, oh, you talk about different shoes, right? Would a runner be faster in that pair of shoes versus that pair of shoes? Well, it's going to be different for every person. You have to find the shoes that fit you and works for you. And it's the same in trading. Like, okay, are you going to be a better trader with the ADX or the MACD? It depends on who you are and the way you trade. For me, I would say that I'm better off with just price action, because I've tried many different things. I've tried many different indicators, and I mean, you can look at the trade here that we have on gold. I mean, clearly, it makes sense from a price action perspective. Hitting that reload zone, breaking above that trend line, it makes sense from a price action perspective. Now, we all know that we can't really use OBV in the forex market because it's tick volume, but we can see, how would we trade? Would the OBV, that's that V, it's that V and W, man. Would it make any changes here, the way we look at price on, let's say, look at the 1 hour, and then the OBV is going to load here? No, I mean, it's the OBV is in an uptrend, which means that there's more bullish volume than bearish volume, but we can also see that it's the same with price action. I mean, the OBV creates a low when price creates a low. What's interesting though is that you can do technical analysis on the OBV as well. Let me show you an example of that. So we can, of course, look at divergences in price. We can predict the reversal here. So what we do then is we look at, now here's that's a low. This is a low on the OBV, and it's a high here on the OBV. Now it's not really a divergence because it's higher lows here as well, but this is obviously a good indication of a potential trend reversal. And then you could put a horizontal level on the OBV, and when price breaks above that horizontal level, you have like a double bottom, because you can do technical analysis on the OBV. So you have a double bottom and a breakout here, which means that gold is breaking out here, and that's valuable information. It's valuable information to know what volume does. But you actually have to go to the futures market to make any sense of this. So we're going to go to gold futures on COMEX, and we try to see if it's the similar pattern here, which it kind of is. You have to confirm with the futures market, because it's not tick volume, and it makes sense. So we can go to our setup that we had here, which was based on going long here, and here you can see that it makes a difference, because actually it doesn't make a lot of difference. All of this that we're seeing on the OBV can also kind of be found in price. One thing though is that sometimes using volume to confirm a breakout is quite powerful. So you can see here, for example, you have gold trading within a range right here, and then you have the breakout right here. And that breakout happens on a volume spike. That's that volume spike right there. And when you have a volume spike like that on a breakout, then you would say that volume confirms price. All right, we're gonna have Ashley coming on the live trading room shortly, so I will have to send him an invite to the stream.
And that's what I'm looking for on pound CAD. Nice reaction. We wicked up, taken the high of this bullish, created an inside bar, taken the high of that one, and we're pushing down with a nice engulfing candle. So looks like the sellers are now coming in on pound CAD, hopefully.
Yeah, that looks like we have. Yeah, looks like we get a strong move to the downside. That almost seems to be news driven.
Did we have any news? Let's have a look. No, we haven't had any news. No news coming. Let's have a look at the current market sentiment. Pound and CAD actually looking a bit weak, so I'm not sure if there's necessarily going to be enough strength to move this down, but we'll see. On the 15-minute, we're still looking at something like that. So we'll see.
All right,
Hi, guys.
Victor.
What did I
Hey,
miss?
Jonathan.
I heard
Hey,
something
Victor.
about bouncing dead cats. How's everything?
Cats and goats and all sorts.
Chicken feet.
Chicken feet.
I'm gonna close my gold trade here, so I'm getting out of the trade here. I'm not gonna be. I might be taking a break from streaming and honestly doing this all day and trading this all day. I feel like I'm getting definitely low on energy, but I want to show you guys the trade history of today on the evaluation account. So we have four trades on gold, all winners, and we're up $187 in profit, which takes us to 4,848. So we went from 4,430, which means we were $30 away from losing the account, and then in the matter of a couple of days, we're almost at break even again. So you can see fairly good win on that one, almost 4% on that one. Yeah,
Nicely
all
done.
in all, a good day. Wish I had a bigger account. I wish I'd copied this over to my funded account. It's always like that, you know. It's I have a really good day trading on an evaluation account, and I'm like, I should try this on a funded account, and it's like, okay, maybe not.
Oh dear. Right, well, that will be it from me for today. Jonathan and Victor, good to see you guys. I shall speak to you guys later on, no doubt. As always, I'll be on Alpha Beta Lab stream tomorrow morning at 9 a.m. CET, 8 a.m. GMT, and I'll be back again for the 5ers stream tomorrow as well. Looking forward to it.
Awesome. Thanks for
Cheers, guys.
Thanks for joining.
Thank
care.
you.
Take care.
Thank you, Mike, for everything. And that was Mike.
That was Mike. That's only you, me. Wow, look at my hair. I keep pulling my hair. It's like gold. Trading gold is not good for me. So I keep. Oh my god, I'm so off today. Oh wow, look at that. Close the trade and now it's running to that TP. But man, that was a good trade, man. That was a good trade.
It was. If I check on ATR, let's say on the five, the settings, the input, the value of the ATR, the setting, On 5, it tells me, let me put my chart on with your permission, Jonatan.
Yeah, of course.
This is the gold trade, of course, and there you go. That's the ATR, and if I measure for today, it's reading 44.06, right? So if I take it from the low of today, the current candle, we are currently at 44.49. So according to, and I have it currently at 5, at a setting of 5, which is, of course, it only calculates it on the last 5 bars. So it's much more sensitive to recent price action and volatility range, that is. And it's giving me that it's already at its 100% ATR. So what I want to say, Jonatan, was that you taking profit here makes a lot of sense to me. So well done for you. Hats off to you.
Thank you. So did you say that it's at 100% ATR of what? The 4-hour?
No, it's the daily, but with the ATR at 5. So meaning much more sensitive, only considering the last 5 candles.
Why 5?
It's just more sensitive. The default setting is 14, but if there's a big difference in volatility, if there's a surge in volatility or even a drop, 14 is going to be lagging. It's just like an EMA. If a price moves very quickly, the 5 will catch up more quickly to a price than the 14 EMA would, because of course it's counting the average of more candles in the past. So the ATR works similarly. If you have a lower number, it's much more sensitive to movement, so changes. So the bigger, the larger, or the 14, the default setting is just fine. It's not wrong, but having it lower is better when there is a sudden change in the ranges. Let's say, I don't know, some news coming out. Let's say NFP. It's gonna take the 14 much longer to see that uptake compared to the 5, if you have it on 5 or something lower in any case than 14.
So is it really? Did you say it's at 100% ATR? Because that's not what I'm seeing.
It's not?
No. That's not
Let me
what I'm seeing.
change. Let me change. Let me change price feed, because sometimes that may have something to do. 44.
Looks like the daily ATR. The daily ATR based on the 5-day period would be like 40-41.
Really? I got it at 5, and it's right now at the 41. Maybe there's a difference in your settings or mine.
But we have the same. We had 41. That's weird. How? Oh, you looked at the. Did you take it from the low?
That's the ATR is the daily range, right? So it's not from the open, but
Right, it's the daily range, of course.
yes.
But then my indicator is showing an incorrect number. Let me add my screen and look at the high of the daily ATR based on. So go in here, select the 5, and as you see, that is actually up here. So it seems like there's something wrong with the calculations of this.
Well, it doesn't have to be necessarily wrong, but the idea behind the ATR is that you want to know what the range was in the last couple of days, whether that be 4 or 15, 20 or 10, but you want to know the range. And of course, the range, by range they mean the low and the high of the day. And so when you start the day, you start at the open, and at that moment, that's the low, right, of the day as well. So if the calculation is only done once at that moment, then of course it's correct at that, first minute, it's correct. But as the market moves and makes a lower low, lower than the open, then the ATR 100 ATR line automatically moves lower, right? The high. Perhaps let me show you on my chart, because I'm talking, and of course it makes sense to me, but maybe it doesn't make sense to everyone. This is the open. Imagine you have a bar. Let me.
Yeah, imagine what I'm what I'm thinking is, probably the indicator line is based on the open, or based on the close price of the previous candle, and it would then have to recalculate. It would have to recalculate based on. Yeah, I would have to code it so that it recalculates throughout the day, because obviously if
you're completely right. Let me show you, for those who are watching and maybe are not following what we're talking about. Imagine that this candle turned out to be, the whole candle, that we're already at the close of this candle. It's not, because obviously this is a live chart. But imagine that it were to close here. That means that if there's no gap, the next bar will open where the previous one closed. And let's assume that that's the case, right? Of course, price is going to move in the meantime, and it may leave this line, at a different place. But let's assume this is the open of the new bar, and that's the daily bar. And the ATR, of course, if you measure right now, regardless of what the value the ATR gives you, because that value is dependent on the inputs you have, right? How far in the past does it need to calculate the ATR, the bars on? But currently on this chart that I'm showing, it's 44.35. That means the average, if price is not going to go, if price is going to go straight away down and not have an upper wick, right? So from the open, it doesn't go any higher. It just drops and keeps on dropping. That means that from the open, price would be able, if it goes 100% ATR, it would go then 44.35, whatever that number is giving, which is this number. Okay, so let me mark that 44.35. So that's going to be on, in terms of price, that's going to be, it's not precise, but 28.83. I'm gonna mark that out. And actually, let me put it a bit more wider so people can see it. All right, so this is the open. And this is from the open. This is the distance of the ATR based on the open, that moment at the open. If price in the opposite direction, if price were to go up and never come down from the open and continue to go up, based on the ATR, you would expect 44.35 as well, right? It's an average. It's not going to be precise. But that's the idea. However, so in general, you can expect then that the ATR to the upside is 44 from the open and 44.35, both the same number, and to the downside. However, as the market breathes and goes up and down during the day, the high of the day might change. Meaning, if I move this around, imagine I'm gonna eliminate, or at least move this to the side a little bit. Imagine that price goes, before it goes down, it goes a little higher, something like this, and then breaks down below the open and continues to go lower. Would it be would the ATR indicate that it's still going to reach this level? Of course not, because the ATR is talking about the range, right? So if it's a range of the day of that whole candle, you have to take it from that high. That high you didn't have at the open, but you do have at some point during the day. So basically, the proper way to use the ATR is a dynamic way, not static at the beginning of the bar, but as the bar is moving around and making high and lows. So you measure it from the high, and that 44 will tell you, 44.35 will tell you that, the ATR has moved and is right now here. So as you see, the levels or the extremes of the ATR, they develop in time. This is very powerful. I don't know if it's boring for some people, but it's very powerful.
Yeah, no, it's definitely a very powerful concept. We got Ashley in the background. Ashley, let me know if it's okay to add you. It's a thumbs up, and I will add you to the live stream. Got the private chat that you can write, and if you're ready to, yes, you have right there. Okay, let's go. What's up, Ashley? Welcome.
Hi, Jonathan. Hi, Victor. Can you hear me?
Yeah, we can hear you.
Wow, wonderful. I hope you guys are doing well.
Yeah, doing great. I've seen that you've been watching us here in the background.
Yes. I didn't catch the. I was using the wrong link to join, and then I didn't catch the ATR. But if you guys are okay with that, that's fine.
Definitely, no issues at all. All right, have you been trading anything today, or you're looking at anything?
A number of areas in terms of the core markets, the 17 core markets I look at. So a number of areas, and what I've done is also for the live stream, I've actually just recently, I think it was yesterday, I enrolled onto the 100K bootcamp. So at least I've got an account so I can show on the live stream, and you'll see the trades as they take, etc. as well. So
wow, nice.
Yeah. So definitely I've got the EA is running, and we can have a look at things if you want. So yeah, you tell me what you'd like to discuss, or how would like to help the community.
Yeah, definitely. I think we've been looking at gold all day, and it seems like today people really want our views on gold. So maybe you could, if you have any analysis on gold, I think that would be great. I'm actually going to have to run, and I will have to leave you with the very capable hands of Victor.
Indeed.
And I will be watching in the background, and I might be back later, guys. So have a great live stream, and see you later.
We will. Thanks, Jonathan. Have a good break.
Thank you.
Cool. Perfect. Hello to everyone in the comments as well. Just to reply, hello, thank you very much for welcoming me as well. How are you doing, Victor?
I'm doing fine. How about yourself, Ashley? I'm glad to see you here, and I'm eager to see what are you trading, and how would you be trading gold, because we have a lot of interest from the audience to see how we traders, what opportunities we see in the market, especially gold. Gold is always very, very popular with the audience. So how would you, if you were to trade gold, if you were to look at gold, do you see any opportunity? Can you take a trade? Is there something aligned with the way you trade?
Yes. So the answer to those questions is yes. And then just to elaborate, to give a bit of context, I apply a multi-purpose or multi-strategy approach. So I've got a base strategy that keeps on trading as the market develops, and then I add on to different strategies onto that. So we're going to focus on the base strategy, and that base strategy, in my other accounts, I'm currently long on gold, but there's no long trade right now on the 5ers account, but it's going to start looking for potential short as that right now we're in a rising trend, in a progress phase. As that phase changes, as it bounces from moving with the trend to against the trend, then my strategy will then take a short trade. So I can definitely show and share with the community and yourself how I analyze. Do you want me to share my screen, or do you want to go through something first before that?
No, go ahead. It's all yours. I'm sure people would love to see you and have an exposure of how you trade as well. They see us, of course, and it's good because we all look at the market differently, and we see opportunities in a different way, and we all have different styles. So it's a good thing to see yours as well.
Okay, great. I'll be sharing.
Take your time, no problem. In the meantime, I have gold. I have your screen here. Do you want me to? Is it ready to put on the screen?
It is ready when you are ready, Victor. Whenever you're ready. If you'd like to finish something first, please go ahead.
No problem. I'll put it on. Go ahead.
Okay, so I think let me give a brief overview, because on a first glance it can be very overwhelming. What I've done specifically for the stream as well, on the left hand side, because I trade a lot of different instruments and asset classes, there's a certain amount that we call our core markets that encompasses all the different asset classes. So I've created a little bit of a list here. As we go through, perhaps today or maybe another time, then you'll see a certain process. I can share the process with you. But specifically in terms of gold, what we're going to do now is let me focus on, firstly, just the chart itself, just the layout, so you can get an idea what's going on. And then I'll talk to that, and we'll go through the analysis. Okay.
Nice.
So
I see you have some kind of an indicator there. Is that something you use very often, or is that part of MP5?
No, it's a third party application, specifically for either streaming or basically for any conferencing, just to highlight your screen and to draw their attention to certain areas for the audience.
Perfect.
Okay, so I just want to start out. If you have a look at the yellow block I've drawn, I just want you to draw the attention of yourself and the viewers to that chart. And then basically, I'm sure most of you, and Victor, I'm sure you know that's a line chart, and we're looking at also a 50 EMA and a 200 EMA. Now, the time frame for that is daily, and the reason that's important and I draw attention is because, first of all, the daily is the most important time frame, and in my opinion, and from a legacy issue, the daily time frame is the one that really one should look at to actually get that trend. So I use the daily time frame to establish what is the primary trend of a symbol or an instrument. And not only that, the amount of data that is displayed is a year. Most often, some individuals, I'm not too sure how much of data does one display. And there's a year's data, and there is a fundamental reason for that. And that reason is, I'm sure, Victor, have you heard of 52-week highs and lows?
Yes.
Yeah. So
yes,
very important. There we go. Very important gauge. So I look at over a year to gauge what is that trend. So that gives me a good idea and to analyze the symbol and what is the trend. Is it a rising, falling, or side trend? Okay. Then if we go on to this section here, let's just remove that. And if you look at my cursor, sorry, I'm just going to move over here. So this here is the candlestick for the daily. So what I'm doing is that I get the bigger picture from the line chart, and then I zoom in with the candlesticks of that daily. So I have them side by side. And if we look further down, this is the candlesticks for the 12-hour, the 8-hour, and then the 6-hour. So all the different time frames are on one screen, and one can easily see what is happening. Okay. Right, then to draw your attention to the chart at the bottom, this is the weekly time frame chart. And the reason I have the weekly time frame chart at the bottom, and it's not emphasized as much, is because I'm looking at the significant highs and lows for that instrument over a 5-year period. So that weekly time frame you can see spans from 2020 all the way to current, and you can see that gold has hit multi-year, if not new all-time highs. Gold's also recently hit a new 52-week high and is basically threatening to obviously create a new all-time high as well. So that's where we are at this point in time. Okay, I'm going to pause for a second. Victor, is there anything that you want to mention, or from?
No, I see that you have candlestick patterns on the right side of the charts, right? Those 6 ones, but there 2 of them are aligned charts. Any reason why those are lines and not candlesticks as well?
We're going to get to that. Good question, Victor. Okay. Victor, these are the RSI. I'm just looking at the RSI index. So the RSI indicator for the symbol, and on the daily time frame, and on the 12-hour as well.
I see. They're indicators basically on price. I understand.
That's correct. Okay. 100%. Okay. And then we got what you guys were talking earlier. There's the ATR at the bottom there of the daily time frame.
You're using the ATR as well. You're my guy. Actually.
I use the ATR slightly different than what I think what you've been mentioning. I use the ATR as basically determining my stop loss distance, the distance for the stops. So it's automatically adjusted in relation to the volatility. As volatility increases, the ATR will increase. That'll increase my stop loss distance to give a bit more room. If the volatility decreases, obviously it decreases, and that stop loss distance decreases accordingly. So my stop loss distance is automatically adjusted according to volatility of the market,
which is completely, according to common sense.
That's correct. And in this particular strategy, I use a 4-to-1 reward risk ratio with a trailing stop, and that's trailing at a 2-to-1 at twice the stop loss distance. So it trails at twice the stop loss distance.
Okay. Good.
Okay, so that just gives you a good idea.
4-to-1. So its reward is 4 times bigger than risk.
Yes.
Okay.
So basically, if you have a look at that, and something that I've also prepared, but maybe not today, maybe some other time, there's a calculation. If you decide on your reward risk ratio, you can actually work out what your break-even win rate is going to be. So at a 4-to-1 reward risk ratio, the break-even win rate would be 25%.
Exactly. Okay, perfect. And I'm sure the question that pops into the mind of people in the audience is, what is if the break-even win percentage is 25, what are you normally getting on average with your
the win rate? Perfect.
Yes.
So the strategy the base strategy that I employ, the one we're speaking about now, its average win rate is around 40%.
40%. Okay, so that's handsomely above the break even. That's very profitable.
Yep. So that's the base strategy, and then you add on different strategies onto that, and they obviously have their own specific areas. But the base strategy just allows you to always generally be in a trade.
Nice. And another question before you continue. You said 4-to-1. Is that the stop loss, the risk reward ratio at the beginning of the trade, or is it the average win compared to the average loss?
Very, very good. Very good question. So to answer your question, that 4-to-1 is aimed. It's the aim, what I refer to as an aimed reward risk ratio. So as the stop loss distance has been set according to the ATR, the TP is placed 4 times greater than the distance of that distance, 4 times of that distance. So that's an aimed. But the achieved, so you got the achieved reward risk ratio, and with the achieved reward risk ratio, it's basically in the region of 3.5 with the trailing stop.
Which is still very good, because it's almost 4. Basically, you're getting almost all of what you plan to achieve, you're getting. That's awesome.
Yeah, the nice thing about the strategy itself, and here's another insight for the viewers, is that the strategy is pretty simple. It's basically a swing strategy, but the understanding of how that swing strategy is developed, you would be able to optimize it in different ways. So with the exact same strategy, you could have numerous settings that's doing exactly the same thing, but you optimize according to the symbols, the batch of symbols, or the data provided in order to get the most balanced one across all the symbols. So the figures I'm giving you is about an average across all 17 symbols for the last 4 to 5 years.
I see. And in between, of course, you have, ranges. Not all of them are at the same level. Of course, I understand that.
That's correct. Is there any questions from the audience that I might have missed out to answer?
I'm trying to see if we have a question. I will ask. I don't think we have any right now.
Okay, perfect.
Yeah, go ahead.
Okay, so what I'll do is that I'll just continue from where we left off in terms of gold. So that just gives you an overview of the chart. The last thing I just want to mention about the reason for the display is if you can look at the weekly chart, you can see this black area here. This black area is basically that 1 year view. So here's the 1 year daily, and that area is this area on the weekly time frame. The same thing here on the 12-hour. This 12-hour is basically this piece all the way to the current price. And then on the 8-hour, it's the blue all the way across. And then from the 6-hour, there's a little pink Indian red from that point all the way. So you can get an idea how the time frames fit into each other.
Perfect.
Okay, so if we have a look at gold right now, so we have a look and we analyze, we take it step by step. Gold right now is in a rising trend. Why? Because we've got a series of higher highs and higher lows. We can see the significant highs getting higher, significant lows getting higher. Current price is above the 50 EMA, current price is above the 200 EMA. If I pause there for a second as well, just some insight for everyone from analysis is that trends don't necessarily just change on a dime. They don't just necessarily change from rising to falling immediately. There's a transition phase. So a trend will, you establish a trend and then it continues until all the conditions for a falling trend are met. In between that, it's still a rising trend, but this is what we refer to as what we call the status of that trend. So right now in gold, we've got a rising trend. So if I go to the little Excel spreadsheet on the right there, we can see that, first of all, 52-week high, there's the instrument. We're possibly approaching a new 52-week high. So gold is very close to making a new 52-week high. The trend right now on that daily is a rising trend as discussed. And we can see right now the current price movement is going with the trend. So if you look at the last 2 days and even the price action for today, it's moving with that trend. So it's something that I call a progress phase. So that movement that's moving with the trend is what I call a phase. And right now it's moving in progress phase, i.e. going with the trend. So we've got a rising trend on gold. It's a rising trend in gold, and right now in its progress phase. Now we're going to get to what I call the status of the trend. So what is the current status? Is this trend still intact, or what we call questionable? So intact, all the structures are still there, or has it become questionable? Has something developed that makes like an if sign? Something doesn't look too kosher here. But at the moment, we can see that everything is intact. Why? Because we continue to make higher highs, higher lows. We're approaching that high, and unless we make a lower high or a lower low, then that trend is still going to remain intact. So we call that intact. Okay. Perfect. So right now we've got gold in a rising trend. It's in progress phase. It's intact. Now the strategy.
Before you continue, Ashley, just for those who are watching this, what is your definition of an uptrend? How do you see that? Is it the EMAs need to be one above the other? Does the price have to be above those EMAs? How do you assess the trend?
Good question. Thank you, Victor. So the definition of a rising trend, how you define it, is a series of higher highs and higher lows. So if I do this, and we can see that these highs are all getting higher, these significant lows are all getting higher. So we've got a series of higher highs, higher lows. Current price is above the 50 EMA. Current price is above the 200 EMA. So those are the three criteria that one would need in order to identify a rising trend.
So in a rising trend that is not questionable according to that criteria is all three of them have to be still standing, still valid. If you're missing one of them, you start questioning the trend.
Exactly, 100%, Victor. So if one of them are missing, it's still a rising trend, but the status becomes questionable, not intact. So it's still a rising trend. It's like you are still, it's like that inertia. You're still moving in one direction until all the evidence shows you're moving in the next direction. If there's something that indicates that you're perhaps going to change direction, we still say you're moving in that original direction, but now you're a bit questionable. There's something just be on the lookout. And then once the criteria turns again, then you got what we call a trend change, or a change of trend from a rising to a falling or to a side.
Perfect. So let me recap that for the audience. So
yes,
you have significant highs, increasingly going, higher highs, and significant lows being increasingly higher lows. That is. Then, if I'm not mistaken, you mentioned price being above the 50 EMA. Is it EMA or MA?
EMA, exponential.
EMA. Okay, so above the 50, and then price being above the 200, right? Is that correct?
Correct.
EMA as well. So actually, in the three criteria, the relative position of the 50 and the 200 is not relevant.
It's not relevant, and the reason why it's not relevant is because if you look at price first, if we compare price to the 50 and price to the 200, and we prioritize that will by default give you the earlier signal than a golden or a dead cross when the 50 crosses above or below the 200 EMA. So Perfect. What's going to happen is that price has got to get above those moving averages first. It's got to then move in that direction of that trend that's been established, and only then your 50 will either cross above the 200 or below, depending on that trend that's been established.
Perfect. If you, for people in the audience, if you're loving the information Ashley is sharing with you, all for free, all for your delight, this is valuable information that Ashley has how many years probably put into to get where he is. If you like this, press that like button, subscribe to our channel, show us your appreciation and how much you value what Ashley is sharing with us today. Continue, please, Ashley.
Perfect. Thank you very much. Thanks for that comment, Victor. And yes, press those likes. While you were mentioning that, I'd had a quick glance at some of the comments. The participant question mark was mentioning, how do I make the setup? I use a indicator on the MQL5 marketplace called mini charts. So it's a collection of all different charts onto one. The only drawback is you're not able to interact with these charts itself. They're quite static. And then I use other charts if I need to interact and move it. So that's the question. It's called mini charts on MQL5 marketplace.
Perfect.
Okay. Right, now let's get into the strategy now in terms of what is the strategy. Now that we've established that we've identified, we've done the technical analysis, we've interpreted the chart data, where does the trading strategy come in? So my base trading strategy allows me to trade with and against the trend. And all I'm doing is a pure swing trade. Another word for swing trade could be a bounce. So basically in that trend, when the trend moves from going with the trend to against the trend, or against the trend to with the trend, those are the trades I'm going to be taking. So on my other accounts right now, I'm on long on gold about a day or so ago. And in terms of this account, when I've just started today, it'll start now looking for gold when it starts moving against the trend. And then it will start taking a short. And then it keeps on moving in that fashion.
Perfect. And so what is it based, the actual strategy, what is it based on? How do you get your signal? What do you look for to get how do you know to go short or long?
Good. Very good question. Thank you, Victor. Okay, so what we're going to do now is the following. Not to get too complex, but very simple. There's an indicator called the parabolic stop and reversal. Victor, I'm sure you're aware of it.
Yes, I'm somewhat familiar with it, yes.
Perfect. For the audience, all you can think of if you're not sure about the parabolic stop and reversal is think of it as another form of a moving average. It's definitely not a moving average. The formula and the way it's calculated is not the same as a moving average, but the concept is very similar. So just to keep things simple, and basically what it is that, as we know, if a price is above a moving average, it indicates that prices are rising, i.e. bullish generally go long. If prices are below the moving average, then basically bearish, or prices are moving down, go short in a sense. The same concept applies with your SAR. Again, the formula is different, but it works a very similar concept. So meaning that when price, in this case, the candles are above the SAR dots, then obviously go long. If it's short, if it's below the dots, then go short. And then obviously you've got the different time frames. So you can see I've got the daily time frame, I've got the 12-hour time frame, the 8-hour, and the 6-hour. So the strategy is as follows. When your 6-hour, 8-hour, and 12-hour time frames, when they have dots at the bottom, i.e. price is at the top and the dots at the bottom. And in addition, on the daily, the dots at the top, it will start then entering a long trade. So if those dots, so right now you can see there's a dot currently there's a dot at the bottom of our current candle, daily candle. There will be no long trades taken at this stage. The long trades were taken yesterday when these lower time frames turned before the daily.
Mm-hmm.
Okay, so that's basically criteria steps 1 and 2. In relation to then criteria step 3, the daily RSI on a 5 period, in order to do a buy, must be above the 60. In order to do a short, must be below the 40. In addition, the 12-hour RSI using a 10 period must be above 50 for a buy and below 50 for a sell. So what it's targeting is it's looking for that daily to find when we're in that overbought section, and then it starts looking for potentially the turn from that swing turn. So it starts looking for that turn. When that swing turn turns, based upon the 6, 8, and 12 hour, it will enter the trade, but the daily must still be indicating with the SAR dots that we are moving down, and then vice versa. So it keeps on continually taking those trades as the market develops.
Okay, perfect. So basically, if I understood correctly, the RSI, they need to be positive, right? It needs to be 60 to take the long, right? Is that correct?
That's correct. No. It needs to be, yes, it needs to be above 60 to take a, sorry, now you've caught me with the words. It needs to be above 60 to take a short.
To take a short. That 60 needs to be on the that's on the daily, right?
That's on the daily, that's it. So in order to take, I might have said the wrong words there. So in order to take a short, the RSI must be above 60. And then in order to take a long, the RSI must be below 40.
Okay. No, maybe it was me. I mixed it up. No problem. So basically, no problem. Basically, what you're then saying is you wanna be going short after the market has moved somewhat to the upside. You want to be going long after the market has gone somewhat to the downside. It makes a lot of sense.
That's correct.
Yeah.
And yeah, you're using those RSIs as that indicating that overbought and oversold areas.
Exactly.
Okay.
All right.
So that gives you a good idea. There's a lot more detail into it, but sometimes it can get too much just as a first glance, etc.
Okay, so that's the basic idea, right? So so it's taking four different time frames into account. It's using the parabolic SAR, and it's also taking RSI as filters.
That's correct.
And it's using the trend, and it's using EMA. So basically, you're using the relative index for filter. You're using the EMA for the trend, and you're using that SAR, that parabolic SAR, for actually the signals to get in on the trade. So with what time frame is, I suppose it's going to be the 12 hours that's going to be triggering you, because the 1 hour and the 6 are going to come first, and then the 12 will come into place later, because of course it's a bigger time frame. So every 12 hours you are looking to check if you have a signal. Is that correct?
That is basically correct. The check-in is automated, so it's a custom EA that's been designed that actually runs, and then I focus on other areas and other strategies as well with hand trading. But to answer your question, the EA actually checks every 5 minutes, because the dots, the flipping of the dots between above the candles, below the candles, can happen as the market moves. So every 5 minutes we'll check.
Oh, I see. It doesn't wait for the close. I didn't know that.
Doesn't necessarily need to wait for the close. So during the back testing, waiting for the close, you can see generally profit factor, recovery factor is generally reduced if you do wait. So that earlier entry as the market moves and it flips, then it will then be able to enter.
And since you're not waiting for the close, that makes me wonder: do you have do you worry about new spikes flipping the SAR, and signaling you something while it's only a spike?
It doesn't, to answer your question, it doesn't worry me, because there's a number of areas that can mitigate that. So above the entry, we just talked about the entry criteria, we've got trade management, trading stops, scale in trades, scale out trades, as well as exit. So if something happens with the dots and they flip again, I'll exit the trade. It will automatically exit the trade, and then it will start looking for the next opportunity as well. And generally with the back testing, depending on the period and the symbols, sometimes it's a bit of mixed data. It indicates that sometimes having those exits doesn't really work in your favor. Sometimes it does. So I have different settings to accommodate different situations.
But you still just let the strategy run when we have high impact news coming on. You don't filter them out.
Correct. The idea with the base strategy and the concept around it is much more greater than just the strategy itself. Is that the base strategy allows you to always be in that potential trade. That also helps the psychology, your own psychology, so you don't have any basically FOMO, and then you can add on, or you can scale up with other strategies that target specifically lower time frames or specific areas, and you can be very selective with that, knowing that you've got a trade running in the background.
I understand. So that's very interesting. So you just explained to us the general idea, how you approach the market, what is your entry logic, and on top of that, you have layers of strategies: how to enter, how to exit, how to abort, when to wait. Do you close anything at the end of the day? Do you leave everything for your trading?
The base strategy, it's kept overnight. So I keep it overnight over weekends. It's not a problem. The idea is to be in that trade. Other strategies I will close during the day, and we've got automated EAs that does what we call an equity close. When a certain level gets reached or certain criteria gets reached, it will close a certain amount of trades or all the trades depending on that criteria. For this strategy, I have very little equity close rules in place because I want to allow to move with the market.
I understand, and just for our understanding, what are these equity close based on? Are they based on a percentage growth? Are they based on goals you have, let's say, on a for each period, let's say for a week or for a month? On average that price never reaches a certain level, so whenever it reaches it's kind of an outlier, statistical outlier, and you want to grab it. What are the basics or the logic behind having an equity close? Very interesting.
Good question. So on the equity close, the main basis is in terms of the account. What has the equity reached versus the balance, or has it reached a certain percentage that we set? So it's all purely based upon the account and equity figures, nothing about time-based. The next thing is that in terms of the entry of the strategies as well, not only do I do single trades where it's just enter with one single trade and then stop loss TP trading, for example, I have a scale in function as well. So I'll enter a trade and then it will place 2 pending limits. If the trade goes against me, it will pick up those trades to add to the primary trade at a better price, and I can set individual TPs for that. And I can even set when a batch. So let's say I've got 10 trades open and they all split into 3. So I've got basically 30 open positions, but basically 10 symbols and it's 10 trades. I can then calculate as well all of the trade number 2s. If all the trade number 2s reach a certain percentage of my account, I can just close all the trade number 2s. That way you're basically scaling out and you're getting the best of both worlds between should I close, should I not? For example, like Jonatan mentioned his trade today. So that's why I suggested close half the trade. Whenever you're in a position whereby you're not certain how to actually, you got that fear, they got that greed, this trade is going well, and then you look at it next time it's going bad, and you say, I should have closed. You don't want to be a deer in headlights. Always act. The best way to act, close half the position. So based upon that concept, the equity close is there to automatically cater for those areas to close at certain predefined areas and levels.
Perfect. Sounds awesome, man. Sounds very solid trade management plan right there. Do you worry about correlations? Because now you just mentioned 10 assets open, 30 positions. Of course, I assume you have everything planned out for your risk, not overexposing, things like that. But of course, I'm thinking people in the audience will be asking, what if they all move together, correlated? Isn't that like a nightmare? How do you handle that?
No, not necessarily. So the first way to understand that is even before we get into the benefits and the goal of trading, let's just come out of trading and understand financial markets. And we have a look at my screen here. These are the core markets, and that core markets consist of the major asset classes, because all asset classes are interrelated to each other. So it's important to understand where that money is flowing to. And by analyzing it and by trading it, you get a better idea. So I trade 17 symbols all the time. And in terms of this account, so it's obviously a 100K bootcamp account. Obviously it just started now, so it's first challenge. It's a 25K account. Trading 17 symbols, I'm risking 0.2% per symbol, and that's a total of 3.4%. So there are times when each symbol could have opened a trade at the same time, or not necessarily at the same time. I could have 17 trades open. Then at that point in time, I'm risking 3.4%. Hence the equity close. The equity close will also, if it reaches a certain threshold, close all the trades at a certain level. So I don't even lose that 3.4%. So it's also about expanding the trading horizons, diversifying. And if we look at the symbols I'm trading, there's very little duplication in relation to understanding the assets. So we got the four indirects, the dollar indirects, the three directs. Those are the 7 major currency pairs: gold, silver, oil, and then the indices, and then cryptocurrencies. So those are all the 17 that keeps on trading.
And do you limit any asset class into, let's say, you're only allowed to have from those 4 indirects only 2 maximum, or something in that region, to not have overweighing on one section of your tab, the possibilities of assets that you're able to trade?
Yes, so it's limited to one trade. One trade can only be open at a time. So it can hedge. So if you're longing one, and perhaps the signal comes in at the same time while you're long and is managing that the short will enter, it will hedge. So I'm basically in a hedge trade there until one of it comes out, but it's not able to enter more than one trade at a time. So it's one open trade at a time.
Perfect. And the hedge is only the 2 strategies. I mean, the 2 directions are not gonna be waiting for each other, right? They're gonna do their independent logic. It's only that the net effect will be a hedge.
That's correct. So it'll be a hedge. Okay. Sometimes, as you mentioned, for example, like that's another reason I'm not too concerned with high impact news when it comes to NFP or FOMCs or any central bank meetings or PCE or inflation. Not too concerned, because if the market gets knee-jerk reactions, which we need to expect it in those times, and obviously as we're speaking with uncertainty with Trump, is that as the market moves, that strategy will then basically hedge. Hedging at the end of the day is not the answer. It does have a negative impact on the overall performance of the trading. However, in relation to those circumstances of knee-jerk reactions, it allows me to always be potentially in a trade. So eventually, once the knee-jerk reaction and the volatility decreases and it starts to move the next day or so, then I'll be in a trade. The one trade will come out and I'll be in that other one, because generally some of the more powerful moves happens after the knee-jerk reactions, when the market's be able to digest all that guidance it's been trying to understand.
Wow, man, I'm very impressed with the intricacies of your approach. I like it very much, because you're addressing a lot of bases. You got basically all bases covered with how you're dealing with the trade management, with the asset classes, with the correlations. I love what I hear. One question: how is the? Go ahead. You were
you go ahead with the question.
No, I wanted to ask you, what is the on this strategy on when you put all the 17 symbols that you trade? What is the the ratio of actually the first question is, what is your yearly drawdown typically on when you have all the symbols running? Just to give an idea in relation to the profit. So you don't have to say the percentage necessarily, but I mean, what's the ratio between the yearly drawdown and the average yearly return that you've seen in the past, and that you think you will be getting in the future as well?
Very good question. Very interesting question to answer as well. So the answer to that question is that average percentage drawdown, trading the 17 symbols. And this data is going back about, and this is what we term as live forward data. So I'm sure as a backtest on an EA, you can't really backtest an account. You can backtest a symbol, and the reality is you're not going to really just trade that symbol. You can, but the backtest results of that symbol doesn't mean that's the result of the account when you combine the symbols together. So we've taken basically a demo account and placed it on a VPS, and with the exact same strategy and different settings as well, allowed that to trade to collect forward testing data On average, for the last 6 to 8 months, it's the average drawdown is around about 2.5.
Wow. Okay. And how does that compare to the return on that same period, or per year or per month?
The average, the best way to describe it, because you're doing this with an account of 17 symbols, the best way is basically an average profit factor across all those 17 symbols with that period is basically in the region of about 1.6, 1.7. So that's the profit factor. So about 70%, 70% growth.
Nice.
On average. There's times when there are certain symbols that perform really well, they can pull up their account, and some of their profit factors are about 2.54 in that region. But
wow.
An average is about 1.6, 1.7.
Very interesting, Ashley. Well, thank you very much. What else what else can you share with us from your? Is there anything else you would like to add to the explanation?
There's plenty, but maybe what we'll do is let me just take a pause for a sip of water, and then do you want to cover something? Then I can still stay on for a while. I don't know if Jonathan's going to come back, etc. But then I can stay on for another half an hour or so, and then I can definitely show a number of areas as well, etc.
Yes, thank you. No problem. Take your break. Take your time. Actually, it's you're free to stay as long as you think makes sense for you and the community. Take your time. I'm not sure if Jonatan is coming. I'm going to remove your screen in the meantime. Is that okay with you?
Perfect. That's perfect. In the meantime as well, I'll still stay on with my camera. In the meantime, I'll try and see if there's a symbol that's basically triggering that strategy that I mentioned, and that we can see it, and then as it takes the trade. So I'll have a look if there's something that's setting up.
Perfect. If whenever you're ready to have your screen on, just put a thumbs up, and I'll put your screen back up.
Perfect. Thanks very much, Victor. I'm still here though. Thank you.
Thank you, Ashley. All right. So let's see. So there we have. That was Ashley sharing his strategy and very interesting approach. I think it shows how much work he put into this in his strategy, in his approach, all the layers, all the testing. This is how it's done. I really am impressed with Ashley. Well done for him. Good for him. So in the meantime, let's look at the chat to see if we have any requests, any questions that we might want to discuss. We can as well look at gold and or any other pair, the dollar, euro, or euro dollar, or perhaps a pound dollar as well. All right, so let's look at the chat. There's a question here about the explanation of the terms and conditions on the 5ers. I think the best place to check this information is with the live chat. They are the person who will give you. They're the the indicated people to answer these questions. Support will be having the best explanations for you. We have Hamid, a regular in our community, asking for US 30 and the US dollar as well by a person who I'm not able to pronounce your name, but thank you for your request. I see as well. Okay, all right, so perfect. And there's someone asking here. I'm not able to read the characters of your handle, your username, but hello, thank you for watching us. Why am I using a mask? Well, the thing is, without the mask, I wouldn't be the mask trader. So I have to wear the mask in order for me to be called the mask trader. You get the point? So that's the idea behind the mask. All right. Okay, so let's do the euro dollar. Yes, indeed. If you like Ashley's knowledge, experience, tips, strategy. If you even if you don't if you don't use exactly the way he's going to use it, but even if you can tweak it, you can experiment with it and change it, make it something your own. I mean, he has that approach. You can use it as a template, right, where he's using different indicators to indicate, to look for the momentum, for the trend, and then using multi-time frame analysis to get your entries. I mean, if you use that, that's a solid start for your trading. I really like, if you like that, hit the like button. That I was going to say. Okay, so let's look at US 30 as Hamid has requested. Let's do that. Let's open. I think this will be fine. Opening the this price feed. Let's start from all the way from the monthly time frame. You guys, I check the higher time frames all the time before I start. Okay, so we have what do we have? We have a bullish order block on the below us, a demand area, and it has been already retested on the immediate retest successfully. Price has normally, this is actually interesting. Normally, when we have this is the immediate retest. Let me indicate this. This candle is the immediate retest. That's the creation of the order block. The first candle after if it touches right away, candle number 1 after the creation of the order block, if it touches that order block, that's called the immediate retest. And the price hasn't really left that order block yet, right? So it doesn't count as the first retest. So, and the second one, still, it sounds weird, but it's the price is still hasn't really left it. As long as in each candle after the creation of the order block, price is still coming in and tapping into that order block, technically the order block is still in the immediate retest phase, right? And this is the first candle that has left that order block, right? So that's the space that was created leaving the order block. This is actually order block a little advanced, but and now it's coming for the actual retest. So this is the immediate retest. I trade the immediate retest and a fresh retest that happens with or without immediate retest. I hope you follow that. If you don't, then check the replay on YouTube. But so it's coming for the following, or the first first retest. This is an unmitigated order block. Still, these are immediate retests. That's my point, right? They're unmitigated because there is no space, right? Price needs to go away in that time frame and come back, leaving a space in between, right, for it to be unmitigated. All right, so it's coming back. So that's one thing that I see on the monthly time frame. Let's see what else do we see. That's the only thing, but it's way below us, and it's not relevant right now. We go to the weekly. All right, let's see what do we have. We start with the current price where we are. This is, of course, no order block because this candle hasn't been closed yet. We go to the like so, and we, of course, have multiple candles. That order block is a little bit bigger. We are, of course, as you can see, we are in a bearish order flow from that point, because predominantly there is only bearish structures being created, meaning that price is, the intention, the order flow, that's the intention of the market. The market is, the sellers are dominating from this point on. It's obvious, but that's what the order blocks are telling us. And of course, we have an order block, a potential order block, which can stop price, or at least pause price, which is this. That's on a weekly time frame. And let's count the number of bars to get enough feeling how recent has this been. We have, of course, 6-7 bars since its creation. It's relatively fresh. It may or may not be fresh enough for some people, to use it as a bullish structure. This one, of course, has been already invalidated. So that's the in this time frame, in any case, that's the direction, that's the destination, this order block that price wants to reach before it decides where it wants to go. At least that's the way I read price. And then the other side, of course, we have this one, which is above us. It has not been retested yet, so price can still come back and retest before it reaches the order block below. But it seems like it turned already and is heading lower before it does anything else. Okay, so what else do we see? Let me get the highest point here to see if we have something. I see Ashley in the background. Ashley, if you just put your thumbs up if you want to come back. Perfect. Because I'm, of course, watching the chart. I'm sometimes not very... let me see how... Yes, there you are. Perfect. All right, so we on the US 30, what else do we see on the daily time frame? So we have our we understand on each time frame where are the demand and supply zone. The monthly, we only have a lower structure below us, and we have on the weekly we left this station and we're probably most likely going to this station, right? That's how order blocks, price usually move between order blocks, right? It creates them, it retests them, not all the time, but it moves in the opposite direction. Not in the opposite, it moves away from that order block that was created into an opposite order block. Okay, so that means that in principle we should expect price to reach this level below us. Let's see if we have anything else.
Victor, just some insight while you're doing the Dow Jones US 30 there. You can see there on your chart there's that significant low that it's approaching right now. If it breaks that low, then that's definitely a huge double top that's formed. And if it doesn't break that significant low that you've highlighted, that's correct, then most likely we're going to find that the Dow Jones is going to go into a massive range, and that range is spanning almost like 5,000 points. So that is the chance. So if we don't have a clean break of that low, then we could possibly go into a sideways movement. But if it does break that low, that's definitely a massive double top. Indeed. What you're referring to is that this is that would be top number 1, top number 2, and that's formation, correct. That reversal formation would be if price takes this low, that significant low, creating that double top. And interestingly, the 200 EMA is basically right now and just slightly above that low. So if it breaks that low, by default, it's going to be crossing that 200 as well. And definitely market participants are going to pay very close attention to that. Perfect. That's a lot of good info. I don't use EMAs, but I'm sure it's very important for a lot of people because it is price just calculated and smoothed out. So it's very important. And we know a lot of investors use EMAs or MAs to for their decision. Trend followers, all of them are heavily into EMAs for their decision making. What's also interesting, Victor, is that the EMAs are not necessarily just for us being used as traders. If you look at institutions, financial fund managers, obviously the large pockets of money where it's flowing, even though 90% or 95% of their analysis is not technical, they'll pay attention to that crossing of that 200. And then they'll basically start either, you'll find the money flow then will start moving away. It will be risk off. Money will start flowing out of risky assets, and stocks are the risky assets in terms of their growth. They'll start moving to safe havens. That's why it's very interesting how gold right now, with the uncertainty and lack of guidance that the market's getting from all fronts, is now there's money flowing into that. So you can see there's a potential slow transition from that risk on to that risk off, and gold's a telltale sign. Perfect. Go ahead. Just last thing, just something interesting as well that's happened this week, and I find it quite interesting how Jonatan did when he did the quiz about the inverted yield curve. The inverted yield curve this week, the 2 and 10 US bonds just inverted this week. Was the end of last week or this week as well? And the last time that happened was basically in 2021, 2022, indicating that potential recession. That recession didn't really materialize. The Fed basically managed to kind of navigate that soft landing, but now that inverted yield curve has turned. So obviously today we're speaking with Trump speaking, the market's eager for guidance on what's going to happen. So that's going to be interesting to see how things play out and where that flow of money moves to in relation to that. So if there's risk off, then probably gold is going to start moving higher, make a new all-time high, and probably the dollar could get stronger as well. And you'll probably find the indices start coming off as well.
Very interesting. Those catalysts, those drivers of big moves, right? Recession coming in, whether or not you will see flow of money from one asset to the other. Those are the big moves that moves everything, basically.
Yep. And remember, the market is a discounting mechanism. It's always looking ahead, never behind. So even though we may not be in no economic indicators are telling us a potential recession right now, the market's going to move at least 6 months ahead. So those are the should be aware. So it always looks ahead.
Yep, that's right. In the meantime, before we continue with the analysis of the US 30, I will put up the Alex who will tell us about the event, the risk event we will be having next week. So here we are.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts, and 6 live hours. So on March the 11th at 9 a.m. GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstration. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10k high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.
There you go. That's the event we're having next week, the 11th of March, all for your benefit. Don't miss it out. Register because there's a lot of benefit, as Alex has been telling us on that little clip. If you are already registered, as Ruhan Khan is, perfect. Then you are in the loop for getting a lot of value out of this event. So let's get back to the analysis. We basically we had a panoramic, a bird's eye view of what the market is looking how it is looking. Now we go a little deeper. Do we find any reversal patterns? Of course, we have that double top that Ashley has kindly shown us. That is potential double top. It hasn't materialized yet, but it hasn't taken out that low yet. But it looks very ominous, right? That Ashley, with everything, especially what you just mentioned about the inverted yield curve, double top looking here. It looks like the market wants to take a deep dive. So it's certainly, and if you look at the lower not the lower time, if you zoom out, we haven't had any big pullbacks in a long time. It's been going up almost constantly.
That's correct. And two points that I can mention. Number one is, even though it does look very bearish at the moment, remember, like you said, and I like what you mentioned there, Victor, it's not a confirmed double top yet. It's still forming. That pattern is still forming until it breaks that significant low. Then it's a double top. But even if it doesn't, and here's the key thing for traders as well, even if it doesn't, don't get your mind set on just one potential part of analysis. Allow yourself to be flexible with the market. So that's why I mentioned, if it breaks that low, there's a highly likely chance we're going to move down, and that's a double top that's confirmed, and we could see price accelerating greatly. The next thing is, if it doesn't, expect a range. If that support holds, that low holds, expect a range to develop between those significant highs and lows, and that's 5,000 exactly, Victor. So we could see quite a bit of a range developing, and that also indicates the huge uncertainty we have in the market sentiment for our global economy going forward, and that's definitely possible with Trump and the uncertainty around his policies and the effects thereof. The next thing just to mention is there's a common phrase that says in the markets go up by the stairs and down by the elevator. And what that means is that when markets move up, they're generally quite slow, steady paced, gradual paced. When markets move down, it's down by the elevator. They're vast, they're violent. And why? General market sentiment and panic, fear and greed. That panic drives prices down. So you'll find that when the markets really move, they'll move 2 or 3 times faster than they move up. Perfect. Excellent, Victor. Thanks for depicting. Very, very excellent. I think just something last, and then I'll hand it over to Victor again. I saw from the comments, Fabian. Yes, I am from South Africa, Fabian.
Perfect. Nice spot there on the on the location.
Yeah, I'm just trying to see the comments and try to answer any questions that comes up while you talk, Victor.
No problem, Ashley.
Okay.
We're blessed with your presence and your comments here. So yes, let's look at the US 30 for Hamid and everyone else who's trading or who's interested in technical analysis and the breakdown thereof. Of course, you have that double top. Personally, I know it's very used all the time. I mean, it's one of those classical reversal patterns. I personally don't use it in my trade plan, but of course I see it. I know what it means, and I don't use it. But I still appreciate when it tells me something, even though it's not it's not an input in the way I trade. Right. So what we have is do we have a break of structure on the weekly? That's important to see, because we have a equal high here, and I'm going to use this as the high is 45,065 round, and I see that it is a lower high technically. So it is, even though it's almost a perfect double top. According to my rules, this is the highest point. Not according to my rules. That's the highest point based on the candles, and that means that I need to look for the break of the structure before that point, right? So not after this high, not after. I'm saying after all the time. I mean before, not before this high, but before this high, because it needs to be the high, right? The head typically is supposed to be the highest point of the structure. So I'm going to consider this as being the head. That means that from this point, I'm going to go back and see if we have a break of structure or the neckline on that quasi. And as you can see, we haven't broken that. To me, that would be the left shoulder for my reversal pattern, the quasi, the one that I trade all the time. And that would be then the head. This is nothing to me in the sense, of course, it's a double top, very significant, very ominous. And yes, it tells us a lot of things, but based on the quasi, we don't have a quasi yet. So until we have the quasi, this is just considered, price action in between. To me, at least, in terms of the quasi. So this is basically the structure that I see. This is the left shoulder, the head, and what it does in between, as long as it doesn't, the only two things that changes the structure is either it takes out this low or it continues higher, right? And if it continues higher, then I'll have to move my neckline, etc. But so we're still needing to wait for price to break that structure or not to get more information. So I don't have anything on the weekly breaking any structures, and on the daily, of course, it would have broken it a long time ago, which is this high, which is this area. And on the daily, it has a very nice quasi, which would have given you a very nice entry as well, which would be this. I may have even, I don't know if I've analyzed this asset before, but if I did, I probably would have this would be the area to get in, and look for your entry right there. Look at that nice looking, very attractive outside bar, telling you to sell me. All right, so that's already passed, of course. Let's look at anything else we have. So do we have a bullish structure, a bullish reversal on the daily time frame? That would be here. And we'll have to see if we have anything interesting. We do have an entry order block here on the daily time frame. Is it still active? It is. And actually yesterday we had that's very interesting. Actually, this tells me a lot. Look at this. We don't have anything else, right? So we do have a weekly order block here that will attract buyers to come to the market. We're not there yet. So that's something for later. But in terms of the daily quasi, and by daily quasi, I mean this structure. Actually, I should I shouldn't put it from all the way up here. The quasi starts just here. That's the established downtrend. It breaks it and it comes back to a relevant area. And look how price doesn't do it in between. Price gets to the order block and then gives you that bullish order block. See that right there? That's the bullish, that's the buyers coming in. That's very technical. Right there. That's the buyers coming in reacting to this order block. So when that happens, what we need to look for is, do we get follow through? Right? Once it's created, those two bars, they create that order block. How does price react to the order block that was created? Right? The engulfing that was perfectly, not perfectly, but recently created, that's today. So today is actually, the close of today is going to be quite significant. And so not surprisingly, but especially today, we have that speech from Trump. So it's going to be very interesting how the market is going to close, the equity market is going to close, because if this is broken, right, it breaks that order block, it tells me that the only structure, and it needs to break both of them, the only structure that was likely for price to use for a reversal would have been taken out. And if that's the case, then we're going to, we don't have anything on the daily, and the weekly is quite wide, so we will be seeing lower prices, markedly lower prices in the coming days. So it's very interesting, and this reaction, I think, tells you perhaps what's to come. When we have a bullish order block like this being created, right, the follow through is price needs to come back to that order block and then have buyers coming in, pushing price higher, meaning we expect from this close, price might come back, move out. But instead of that, what do we get? We get a bearish engulfing, where buyers are supposed to take control, sellers are actually taking control, meaning it's a sign of weakness, meaning it looks like it wants to go much deeper. This to me tells me that this point here, the buyers are not taking control, and it means simply that the market is likely to continue lower. That's on the daily. I haven't looked at the lower time frames yet. And yes, of course, that looks very weak. We did have this is not a quasi on the 4 hour.
You okay there, Victor?
Yes, I'm fine. No, and from time to time, I need to take a few pauses.
Totally understandable.
Maybe I should put your screen on.
Yes,
and
you
can
take
a little short break.
No worries, Victor. Go ahead. I'll pick up where you left off. Okay. Something interesting to pick up from where Victor was just mentioning now on the US 30, the Dow Jones 30, is the following. If we have a look at the S&P, look at the S&P 500. Now, the S&P 500, remember, is a much broader index than the US 30. The Dow Jones is in a sense, it can be considered like the big daddy, but it only houses 30 of the largest cap stocks in that index. The 500 is a much broader index. So therefore, with a much broader index, it's a much more accurate reflection of what is happening on the US indices. It's not only limited to 30. Now notice on the chart, you got a very similar pattern to the Dow Jones or US 30. However, right now we are breaking the significant low on that S&P 500. So the S&P 500 at times and most times is a general leading indicator for that Dow Jones. So if that S&P breaks it and cannot hold it, or if there's not a knee-jerk reaction to come back moving higher, then there's a very likely chance that US 30, the Dow Jones itself, will break that significant low, break the order block that Victor was mentioning, and potentially go on to test and likely break that significant low on the US 30. So we're right there now, busy breaking. So it's going to be interesting to see for today and into the week what happens on the US indices. Now, another interesting tidbit along the same lines, if we look at the NASDAQ 100. So remember, the NASDAQ 100 is your tech-heavy laden index. Obviously, NVIDIA is a large part there now in terms of the index. And you got a duplication of some of the stocks on the NASDAQ 100 and the S&P. But have a look at what's happened on the NASDAQ already. It's broken that significant low. It's busy testing that 200 EMA right now on the daily. So we're right now in the throes of basically having a trend change of the NASDAQ 100 from rising to falling. And this is very interesting indeed, something to pay attention to. And notice again what we mentioned about that little phrase. Markets move up by the stairs, down by the elevator. This is close on to 2,000 index points that's given back in a fraction of the time it took to gain those 2,000 points. And another indication of that, during COVID, the market dropped basically a large percentage, but the distance it covered basically took that market before COVID close on to 2.5 to 3 years to make up, to move higher. So almost 3 years worth of gains lost in about a month or two when the pandemic was basically announced and hit. So it just gives you an idea that we expect volatility to increase in the next coming days going forward. Okay.
Thank you for that, Ashley, for that that information. Yes, it's certainly so in equities, in Forex as well, but not as much, right? Because Forex is not exactly, it works differently, right? It's two different countries being compared to each other. It's not necessarily price going up and down.
Yes, that is correct, Victor. However, especially when we have, that's the beauty of looking at all the asset classes. If you, I'm not too certain who year, etc., during COVID or during financial crises, if you have a look back and you've traded through that, you can actually see, even with currencies, for a currency on euro dollar, for example, the main one, to move at least 400 or 500 pips within 2 to 3 days is actually nothing. And it can happen, especially when we get these major shift changes, and it's what we call that, what they refer to as rotational asset class changes. So there's that panic, money moves out, money moves in somewhere else. Money's always got to move somewhere, and we're in the precipice of that potential change right now. Whether it will happen or not, no one really knows until it does. But the fact is that when it does happen, expect everything, every asset class, crypto, metals, oil, agricultural, even agricultural commodities, everything to move. So we are in that potential point at the moment. There's a lot of areas that are in a sense potentially creating the perfect storm in relation to a move down. And again, movements down always are faster than movements up. So just be aware, but don't bank on it. Always be flexible. Move as the market moves.
Perfect. Yes, I think that's certainly. And while we're talking, I'm gonna switch back to the graph that I was analyzing. Market has been coming much lower as we speak. Of course, the market is. We have the New York Open. Going back to what I was saying, the close of yesterday, closing as in a bearish engulfing, to me tells us something. That tells us that the sellers are, even though buyers are supposed to come in, they're not coming in. Meaning that means that the sellers, they have the advantage to push a price continuously lower, and that's exactly what we see. If we go to lower time frames to see if they have anything else, I did go to the lower time frames. There was a quasi. Yes, there was a quasi, and it was we didn't react to it. This is the importance of having. This is on the H4, and I'll point you guys to how it looks like. And there we go. This is that correct? Yes, this is the downtrend, the established downtrend. It breaks it, even if it's just one candle. It breaks it. It breaks the neckline, comes back to that order block, and here the importance of watching and waiting for the confirmation, because not all quasis, not all reversal patterns are gonna work, right? It doesn't work all the time. It just gives you a better chance of something. It's more likely to happen, but it doesn't mean it's going to happen 100%. Nothing in trading is 100%. So what does price action tell us when it gets back to that order block? Do we see the buyers coming in? No, we don't. If anything, we see the sellers. Look at that bearish order block being created right there. The sellers still taking control. So actually, by the close we had, that was almost 4 hours ago, we could have already suspected that we're gonna break and go lower because of that, those structures. So it's kind of very clear, very technical. The market is quite weak, and it looks it's already so far down. It broke that structure, that daily order block to the left. So that's my analysis. Basically, we have let's look at the ATR to get an idea how far this can go. Actually, I can look it up here. Just the daily ATR, we have 672 according to this indicator that I have on. Let me measure it from the top. 682. So basically it still has about 4260, 619. It's not too precise, so don't pin me on it. Somewhere here, that's based on the ATR, that's the measured move, or the average move you would expect if today would be an average day. And you could argue Trump speaking will make it not an average day. So, adapt or adjust that estimation or projection to your discretion. But this is basically just on the numbers what we could expect price to go to in terms of lower prices. The sellers are completely in control. There isn't anything else I can say about this because I don't have anything to the left on the daily time frame, and it doesn't make sense for me to go to the lower time frames because we're going to have too many structures, and that's not going to be significant for us. So I hope that helps Hamed and everyone else who's watching this pair. Maybe we should look at gold.
Yep, we can go for it.
What are your thoughts on gold, Ashley?
So my thoughts right now, gold, nothing's really changed in terms of the higher time frames, and you always go from a top-down approach. So from that, there's nothing really changed from about an hour or so ago. We can see that during the day, it's come back a bit, but in terms of the structure, the daily structures, it's still intact. So we have to see how the rest of the day ends up and into tomorrow. But obviously, if you're looking at lower time frames, you can see that and the strategy I mentioned earlier, you can take that exact same principle and use lower time frames. Then you would have gotten into a lower time frame trade. I'm just not showing that strategy right now today, but that's exactly that duplication. The way the market is fractal, you could use the same concepts. So right now on an intraday basis, it's coming off, but the daily structure from my analysis earlier before, it's still a rising trend. It's still intact. We're still in progress phase. And the test right now is if it's going to test and break that potential significant high, or that significant high to potentially make a new all-time high. If the indices start to move down quite significantly, there's a very, very likely chance that you will find that gold will move and break that high. And the reason why is because we could see that transition of money flowing out of the risky assets from indices, and it's got to go somewhere. Where does it go? Safe haven. Gold's always seen as a safe haven, as a store, keyword store of value. Obviously, we know gold itself, the value changes every day. It's changing now. But the perception of a store of value, that's where it's going to go to. Where else can it go to? It's going to go into the US dollar. That's another safe haven as well. So those where you could see that dollar potentially strengthening, and that's obviously going to have an effect on Euro, Cable, Aussie, Kiwi, and Yen, CAD, Swiss. But that's the potential that could happen. Again, whether it happens or not, anyone's guess. But it gives you an idea of where we are right now and what's happening as we speak.
Perfect. Let me break it down to, in terms of the quasis and order blocks, I'm going to try to do it as quick as possible. We still have about 20 minutes into of our streams, guys. So don't forget to hit that like button if you're getting value out of this stream, if you're enjoying yourself, if you want to show Ashley how much you enjoy him coming here, taking the effort and explaining his ways, his approach that took years to develop. Hit the like button. Subscribe to our channel. And actually, by the way, Ashley, how can people find you on social media? How can they find you if they want to get in touch with you?
Well, right now, Victor, probably the best place is here, because I think there's a plan in place for me to be on more regular on the live streams. So kind of watch the space, and basically, you can hold me for now until something else is maybe set up.
Perfect. So you heard it. Here is the place to find Ashley. Perfect. All right, so I'm going to break it down and make it as quickly as possible, which is a relative term, because I do take my time when I do my top-down analysis. By the way, before we continue with gold, I was going to ask you, Ashley, you mentioned you use the same approach.
Yes.
Using multiple time frames, using everything that we just saw. Actually, let me put your screen on. Everything that you just you just shown us, but you use it on the lower time frame. And now the question comes: what time frame or what combination of time frame are you talking about? Are you starting from the hourly, from the 2 hourly? Where are you starting the breakdown?
Okay, so good question. So if you just have a look in terms of the principle and the mechanics around the time frames I've chosen here for the main one, is you've got the daily, you've got the 12, daily, 12, 8, and the 6. So 12 is basically twice the daily, 8 is 3 times the daily, and then 6 is 4 times the daily. So the answer to your question is use that formula. And you could choose a number of time frames, but the time frames I use, which follows that process and that logic, that logic flow, is 4, 2, and the 1. 4, 2, and the 1.
And what do you have to the left? Do you have to left the 8? You would have
yes.
an 8 to the left.
With the lower time frame, don't necessarily need to have 3 or 4 time frames, but I've got the 4, I've got the 2, and that's half, and then I've got the 1, which is 4. Obviously, in terms of the 8, the 3 is difficult to divide into 4, but you could go, for example, 6, 3, 2, 1. So the numbers will be slightly off, but the principle is still there, is how you break the time frames down. And notice, just as a thought, notice I haven't gone from one higher time frame down to an hour or a 5 minutes or 15 minutes. There's the incremental changes that you can't just necessarily skip. You've got to understand how the time frames fit into each other. And again, not everything is about a lower time frame. It's all about understanding how that time frame is structured. So the main thing is about that principle, what fits into what and how it all makes up. Hence why I've done the colors, so you can get an idea. This gives you a good idea of that move. And then that starts the concept, the brain thinking of how things fit together.
Perfect. That makes a lot of sense, Ashley. What you said about the incremental moves when you go through the time frames, because I do top-down analysis all the time, and that is one principle that, it's one of the pillars of using top-down analysis. You got to know, you got to be aware of the context. Yes, the market is fractal, but you need to go at it at a systematical way in terms of what kind of steps are you going to be taking between the time frame. It's not random. You can't just go the weekly to an hourly and think, they're going to be connected. Yes, they're connected, but not as much as you think. There is depending on the strategy, there is a rule or a optimal step you take. For example, in my trading, what I do is I divide by 4 roughly. So I go from the weekly to the daily to the 4 hour, the 4 hour to the 1, etc. But that's just because, I've noticed in my trading, it makes sense. But that doesn't mean it makes sense for every strategy. So it's a discovery game to go and check what makes most sense for your particular strategy. And that's what you've shown us today, that you have a system, exactly what kind of, how to break it down as you go into the lower time frame. And that's very important to realize. You still have to be connected. The next step needs to be lower, but still connected to the, to the bigger one. Otherwise, it's going to be disconnected.
Correct. Quite correct, Victor. I fully agree with you there, and I like what you said. And it's just something else to add on to the principle, what you said, along with previous times I've heard you, whereby it's that hard work of going through that process. And in my personal experience, the amount, I would say, if you take 70% of the time of the work, the research, the back testing, the forward testing I've done, they've basically all resulted in zero, meaning that you had to go through that process to know what not to do. It's like the Edison light bulb. He did so many thousand ways to discover how not to do a light bulb. He only needed one way. So for everybody else in the community, going through that work in your own time and not having something fruitful at the end doesn't mean it's a waste. You do know then what doesn't work and how to structure things. So that's very, very important for your own personal development and journey. And it makes you far more richer as a trader, and you mature better as a trader. And not only that, is you start to understand how to use discernment. And what I mean by that is there's so much information out there. We're giving you information right now. Victor's giving you valuable information, all the presenters as well, Jonatan. But it's what you do with that information. What do you understand how to apply it for you? That's critical. And that's where the understanding and how does it apply to me, how I'm going to use it. So very critical. Thank you, Victor.
No problem. So let's get back on to that gold. We have about 13 minutes, so I think that should be enough for us to look into what gold has to offer, the monthly time frame. There isn't anything here. Basically, price has been going quite in a straight line. The pullback has been very shallow so far. There is an order block on the lower time frames, and there is on the monthly as well, but we're nowhere near that area. So it's not very relevant right now. This box that you see to the right, I should say, this box is based on the average ranges. This is what, if this year, 2025, doesn't have any outliers kind of a range, this is the range we should expect from price. And that's so far it's been within that range. So let's see how that goes. But it's only the third month of the year, so maybe it's gonna expand and not be such an average month. All right, so we don't have anything else. There's no order there is a fresh order block, but we're not there, so there's nothing we can do or other than just wait for price to get there. On the weekly time frame, you can already see that that we have a fresh bearish weekly order block that was created by the close of the close of previous week. So we finally find some bearish structure on a high time frame. That has been quite a time before that has happened. Last time was right here, and it didn't take much for price to negate that move and invalidate that order block. So let's see by the degree, the how many bars it takes to break it. If it breaks it, that will tell us how bullish the market still is, right? Is there a change of character? Is it taking longer to break it? Maybe it's not breaking it. Maybe it's gonna retest it. By that fact, we can start understanding if price action is changing, is having a change of character, right? So is the behavior differently? We don't know yet, but based on this order block, we could certainly make a case for a short, right? Because that's what the order block is telling us. Sellers are coming to the market. It's an outside bar, not just an engulfing. So it's even more powerful. It trapped traders who breakout traders who thought at that point that price was gonna continue higher, and it just slams it down and closes to the other side of that range. So let's see if we have a weekly reason to go short. Let's see if we have something on the daily. And you already see that we have a neckline on the daily time frame that was broken a couple of days ago. And that break of that neckline, and maybe I should point it out, that break of that neckline, right, gives us this quasi. Actually, this point is much lower. So, and it gives that quasi, and it gives us 2 entry order blocks on the daily time frame. Right. So, if that is considered, then we are getting very close to the one of those entry order blocks on the daily time frame. So these areas are very interesting for a short. And if we go to low time frame, we can spot as well the H4 right there. And we have 3 areas actually on the H4 where we could be looking for shorts. And we're currently in one of them. So this is interesting to see how price action is going to develop, as we have now already tapped into that order block, that daily, which is also an order block, entry order block short on the H4. Let's zoom in. On the H4, there isn't anything here yet. The H2 is just about to close and create that order block on the H2. So we now have alignment. We have the weekly telling us this is a great area. It's much wider, of course. We have the daily telling us this is a great area. The H4, and now H2 is coming in as well. You see that alignment? It tells me that if price comes back into this order block, you have a potential after the close, you have a potential of getting into a trade that has multiple time frames telling you to sell. That makes it a high probability trade. And you can even consider on the H2, there isn't anything here yet, and it hasn't invalidated on the H1, that is. It hasn't invalidated this order block, but it looks like it wants to. So we'll have to wait for a price. This one, by the way, has been invalidated. We have to wait for price to do it definitively. But we can already go to the lower time frames to see if we have any areas where we could wait for price to come back to. And if you know how I trade, you would already start getting an idea of where I would want to take a trade. Right, this on the lower time frame, the 15. I don't personally take the 15, but it's perfectly fine to use it as a. Actually, this isn't a quasi to me on the 15, not on the 15. So I'll have to take these off. I don't have a quasi here. We go to lower time frames. of course, you will have you will have another one. Well, let me check if it's valid. This quasi, this reversal pattern on the 5-minute. This would be then considered the left shoulder, the head, the neckline that is broken. Market is telling us it wants to go lower, but a lot of times before it actually continues lower, it breaks down and comes back. And you want to be getting in on a structure that is, this is 1, and these 2 are together, and that's it. We don't have anything else. We do have 1 here, which may or may not be still within. Yes, it is still tradable. So these are the structures that I think, well, you can build any case. It's the same thing with Ashley. Ashley just shown us one configuration of his time frame approach, where he has the daily H12, what was it? H8 and then H4. Right? Is that correct?
Daily, 12-hour, 8-hour, and 6-hour for the core. Okay. That's it, for the core strategy.
Exactly. That's one configuration, but of course you can use the same formula when start from a different time frame. It doesn't really matter as long as you keep the relationship in between the time frames to something that makes sense to you, and of course that you have backtested. The same thing applies for my approach. You don't necessarily have to be trading the entries on the 5-minute. You can do it on the 15 as well, or even the 30 minutes. It's up to you, as long as you understand the context and the reason and the relationship between the time frames, how you configure them. So these are the areas that, if price comes back, I think are great shorts to be taking. And if you do so, for everyone who's interested, I will put my stop above that structure. How much above is for you to find out in your backtesting, but above in any case. And you can go as the market is confirming on higher time frames that it is reversing. You can use the TP of that time frame. Meaning, if you have something, let me take those arrows out. Meaning, for example, on the 2-hour, this is the highest time frame right now that we see a reversal, right? So it doesn't make sense to use an H4 relevant order block if the H4 isn't reversing, right? So we need to stay true to the time frame that the market is using to tell us what it wants to do, because that decides, that will depend to the kind of movement that we can expect from the market. So in this case, it's only the H2 so far. So we need to find something on the H2 that makes sense to us. So in this case, I would be targeting only this structure and nothing else until I get more information that tells me that I can take, I can target something else. For example, something on the H4, maybe something on the daily, etc., etc. You get the drift. I might even target perhaps this if we get a daily structure telling me that this could that the daily has turned as well. That hasn't happened yet, but if you understand, so you use the time frame in which price action is reversing or is showing those reversal candlestick pattern. So there it is. That's the explanation or the breakdown of gold. Mike has been expecting this move down all day. I hope he's still in his trade, or maybe he got new shorts. So all right, that's we have come to the end of our stream. Sadly enough, price is moving quite. Let me go to the lower time frame. It's going quite heavily in that direction. May or may not come back for that entry. And that's kind of difficult as well to watch price switch, go and leave you behind and not give you an entry. That's not something everyone. It takes a lot of experience, I guess, to not get into FOMO and don't do anything about it. But it's one of those things very difficult for a lot of traders.
Indeed.
All right, so
it's a challenge.
It is very challenging. All right, so we are at the end, as I said. Everyone, don't forget, we are just a week away from our risk management event, right? MasteRisk, you don't want to miss that. It's all packed with a lot of information, a lot of experts coming, showing you things that they have gathered, knowledge they have gathered through the years of their experience. So you don't want to miss out on that opportunity. On that note, if anyone is part of the Discord community, anyone, I know there's a lot of viewers out there who are part of our Discord community. We have a workshop coming up in about 45 minutes. I will be speaking there. So I invite you to join us as well. If you're not part of that Discord community, you're missing out. Yes, you are. Buy an account with the 5ers. Get your hub area that will give you access to the Discord community. And gold is falling as we speak. So on that note, do you have any last comments, Ashley, before we end our stream?
Yes. Just lastly, Victor, I'm sure from myself, and I'm sure on behalf of the community, I'd like to thank you and Jonatan for week in, week out, providing your valuable insight in your time. So I know for myself, even though I've got quite a number of years experience, I still find hearing what you got to say and Jonathan got to say and all the guests invaluable. So thank you very much from my part. Thank you to the guests as well for all your comments and your questions. Sorry we couldn't get to all of them, but again, join the 5ers live stream tomorrow then. Thank you very much, Victor. Much appreciated. I enjoyed having the session with you.
Same, likewise here. Ashley, thank you for those those kind words. I truly, on behalf of everyone of our team, I truly, we appreciate those kind words. On that note, take care, guys. See you next time. Bye-bye.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts and 6 live hours. So on March the 11th at 9 AM GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstrations. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10k high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.